in the first quarter. So, they're basically the home team trying to support the home overall stocks. But we want to go broader in the world of exchange-traded funds. We can do that with the one and only Eric Balchunas, Senior ETF Analyst for Bloomberg Intelligence. And look, what have fund flows look like here in the US as well? Give us the US perspective as well as a global one.
Sure. The China story is fascinating. It really mirrors Bank of Japan. They were bought up ETFs like crazy for the past decade. The China national team has bought $50 billion worth of ETFs. To put that in perspective, that's about 90% of all the flows into China ETFs.
Wow.
So, they are the big buyer. But here's the problem. The people there aren't buying it. They generally want to buy the NASDAQ 100, but there's quotas and stuff. So it's like they're trying to get overseas to buy the NASDAQ 100 in the U.S. markets, but they can't. So there's a lot of premiums in those ETFs. The Chinese government's like, hey, let's try to keep them here by propping up the market. And that's where it's at. It's a conundrum for the government, but our team, who's led by Rebecca Sin, anticipates another $50 billion probably in the second half. So for investors who like QE type governments, China right now is like QE crazy. So it's going to be interesting to watch, though, to see if the local investors will finally come around and buy Chinese stocks.
So, Eric, just give us a sense of the Chinese ETF market. How big is it? Are individual investors participating, or again, is it just the government?
Well, the government has come in recently. Now, the market is a lot of individual investors, but it's smaller. Look, ETFs are not as big in certain countries as they are in the U.S. Because of different, sort of the plumbing in the market. So it's growing there. It reminds me of Japan again. Like Japan, 70% of all the ETF assets are the BOJ. And I think, now that China's stepping in this big, we're going to have a similar situation here. But over time, ETFs tend to win because they're cheap, easy, all the reasons people like them in the U.S. But they're slower growing over there, for sure.
Compared to the stratospheric growth that we've seen in the United States and the inflows that we continue to see. I know we always have you on to talk about the Bitcoin ETF and flows into that. Maybe that slowed. But more broadly, ETFs on fire this year.
Yeah, so if you look, there's about $400 billion in ETF flows this year. And every month, the monthly flow this year has been above the average. So in the second half tends to be bigger than the first half, typically in ETF land, especially when the markets are up. My colleague Athanasios Serafagis did a study, looked at SPY. Every time SPY returns 10% in the first half, it averages 28% on the year. So that's a good sign that the second half will be big. If it is big and those flows maintain above monthly averages, we could see $1 trillion in ETF flows, which would be the all-time record. We think investors, look, bull markets are really good for flows. Bear markets are good for market share, but bull markets are very good for ETF flows because people will be buying both the cheap beta stuff and they'll be buying the exotic stuff like the Bitcoin ETF and some of the hot sauce single leverage ETFs and all that stuff. People just sort of buy everything when markets are up. When they go down, they tend to just buy the cheap beta sort of vanilla stuff.
All right, Eric, always nailing it. We appreciate it. Eric Balchunas, Bloomberg Intelligence. He is the pride of Philadelphia, Pennsylvania. I didn't even get to Bitcoin. Bitcoin's down another 4% today. You blink, and this thing moves $10,000. I have no idea what's going on with this thing. But again, we're down 4%. But there were those inflows into the spot ETFs, which were so important, I think, just for the credibility of crypto in general. But we'll see where that kind of works in relation to the underlying Bitcoin.
And there has been that selling pressure from a supply side, many worrying that Mt. Gox of old offloading some of its $8 billion worth back to creditors, whether or not Germany's starting to sell. I think also, maybe we'll start to see it pick up again if we see the Fed and the cut scenario come back. But for now, we've been quite disconnected from the stock market.
All right, coming up, we're going to return to the south of France. Economic conference in France. Pascal Donahoe, Europe president, will join us next. This is Bloomberg.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
you have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors, including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New episode Wednesday on Bloomberg Television.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
Money, culture. Haslinda Aman tells the story of Asia's rise through the people who are helping to shape it. This week, with the drive of winning over a new generation of fans and players, Live Golf CEO Greg Norman is shaking up the game.
The best players in the world, on the best golf courses in the world, in the best cities in the world. It's very easy to get that multiplying factor to move out.
Latitude, encore presentation this weekend, only on Bloomberg.
Good Friday morning. We are back here. Caroline Hyde, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, simulcasting on television, and we're also streaming, so we're all over this thing. We're on Bloomberg. You can head over to youtube.com. That's where you can find us. Good stuff going on out there. Jobs day today. We had the jobs number come in a little bit better than expected on a headline basis, but smart people like Michael McKee tell us that we have to focus on some of those revisions as well, so we'll get to that in just a moment. We did speak to Julie Su, Acting Secretary of Labor for the United States, to get her thoughts on the United States labor market. Let's take a listen.
It's another very solid jobs report. 206,000 jobs created, bringing the total since President Biden came into office to nearly 16 million. I've been here before talking about the unemployment rate. We had an unemployment rate at or below 4% for the longest stretch since Neil Armstrong stepped foot on the moon. And it's ticked up slightly now, partly because we also see an increase in labor force participation rate among prime age workers. People coming into the labor market looking for jobs. It's taking them a little bit longer to find them, but we're seeing a balance between supply and demand when it comes to workers looking for jobs and employers finding what they need. All signs of a strong, steady economy.
The obvious flaw in some of these numbers, Secretary Sue, might be the fact that we've had big revisions for the months prior, 111,000. When you look at some of the months prior, do you look at today's data and say, you know, we might expect another revision, that perhaps some of the rosiness of it seems to kind of be undermined with each next month of data that comes in and some of the revisions that come in?
I'm so glad you asked that question, because revisions are part of the numbers that come out. They've always been part of the numbers. It's why we're able to put out numbers every single month and then adjust them to make sure that data that comes in later is incorporated into it. That's why we don't just look at 1 month's data. That's why we look at trends. If you look at by any measure, since 2021, when the president came into office, if you look at the last 3 months trend, no matter how you slice it, the pie is getting bigger. There are more jobs in the economy. More workers are getting these jobs, and the real wages are up. So that means that more working people are also having breathing room to be able to live. Those are all not accidents. Those are all very much fundamental to President Biden's vision of how you build a strong America.
All right, that was Acting Labor Secretary Julie Su speaking to Bloomberg here on this Jobs Day. Again, the headline payroll number came in a little bit better than expected. Unemployment rate did tick up to 4.1%. We were at 4% last period. Look at the wages, up 3.9% year over year, down a little bit from last period, so moderating a little bit. So there's something in there for everybody. Let's get the smart people in here and help us break it down. We do that with Liz McCormick from Bloomberg News and Michael McKee covering all the economics for Bloomberg Television. Mike, let's start with you. What did you take away from the number? Revisions are important. Tell us why.
Yeah, that's the takeaway, is the revisions. They give us a sense of what the real underlying growth rate is for jobs. So we don't know if this 206,000 is going to last. And I would point out that if you look at job creation over the past 6 months, or even a little bit longer, but over the past 6 months, 5 of the 6 months, the jobs number has been revised lower forward. And Julie Su was just talking about how you need to look at more than one so you can see the trend. Well, if you look at the trend has been for revisions lower. Now, we're not being revised down to levels that are concerning, with the one exception of April, but we are seeing a fairly healthy economy, and I would say that Secretary Su's characterization of it as a sort of solid, balanced economy is accurate at the moment. It's just that this trend is something we're going to have to watch.
I want to bring in Liz McCormick. She covers all the bond market stuff for Bloomberg News, and she is all in Rutgers, by the way. I'm talking undergraduate MBA from Rutgers. She believes Rutgers read, so that's pretty fun. Liz, what's the bond market telling you here on the back of this news?
Yeah, I think with the way, Mike laid out all the data nicely, as he always does, but for the bond market, it was like, okay, good. This wasn't a surprise, really strong number, even though the headline was a little bit above. But when you take it all together and the unemployment rate ticking up, it seemed to kind of lean further into what Chairman Powell's been saying. We're seeing some easing in the labor market. So the bond market, which has been pricing about 2 Fed cuts this year for a while now, kind of kept that in play, but are bringing, short-term 2-year yields, so a pretty good fall today, because it just seems like, oh, good. This is adding to the case that the Fed will ease. And I've seen some folks like Mike Feroli at JP Morgan, who they're calling for the first cut to come in November, but he said today's data kind of opens the window a little more for September. And people are saying September is in play. So I think the bond market took this as relief, not enough to kind of go totally over your skis, because remember, we have CPI next week. That's a big piece of data. So they want to get through that. We have the political risk brewing. So I don't think it was enough for the bond market to go too far in, but you're seeing the curve steepen, short rates coming down more than long, and people, as you guys have talked in the past, are a little bit weary on the long end because of that looming fiscal picture and debt that seems like it's just going to stay high in the U.S. for a long time.
Yeah, Mike McKee, interweave probably less where you want to go, but the politics with the macroeconomic policy, because there has been a lot of pressure on the bond market of late as the market tried to factor in what a Trump presidency might look like. And so, has the Fed in any way been forced to respond to whether this might change policy decision-making?
The Fed hasn't been forced to respond, and arguably they will not, because they historically don't. They look at it as a completely independent situation. Besides, the market is maybe pricing what it thinks might be the outcome of a Trump presidency, but nobody knows for sure. You don't know whether the deficit is actually going to go up or down. And so the Fed really can't react because it doesn't know what's actually going to happen. They can't make policy or change policy based on suppositions or theories.
So, Liz, has the trading in the bond market, in the rates market, has it been, would you call it kind of consistent with some of the data we're seeing here? Or do you see traders, investors putting on some big bets one way or the other?
Well, I would say it's consistent. Maybe I'm biased because this is my biz here, but I think, to Mike's point, what I'll add to that is investors always say unprompt, they bring up on their own if I don't ask, which I think is more important than them answering my questions, is that they see whoever wins the presidency and even the breakdown of Congress. Of course, if there's a sweep, more can get done, but no one's seeing kind of strong odds for fiscal discipline, like, oh boy, in this scenario, deficits are going to really go down, there'll be less debt. So I think that's why, no matter how, because like Mike said, even with the rhetoric, you don't know who gets in if they'll do what they're saying. But the sense is that this kind of, again, no one's screaming, waving hands, we're going to have a bond crisis here, but that we have a kind of unsustainable, if it keeps going on, fiscal situation with the debt load. And so I think that's why people are leaning away a bit from the long end. They favor the shorter end, not only, of course, money market securities, you get a nice return just with no risk. But I think that's why the bond market kind of says, hey, we're okay, some easing is going to come, but we can't see long-term rates, 10s, 30s, really falling, so much if the fiscal house doesn't quite get in order anytime soon.
That's the longer term play. Let's bring it back to what Liz had just mentioned, Mike, which is CPI print. And ultimately whether we are seeing echo, because we had a big surprise last month. Are we anticipating a big surprise this time again?
No, markets are not anticipating a big surprise. They're expecting a continued slight movement down in progress towards the 2% target. What'll be interesting to see is whether or not it is a surprise, because then that would put even more weight in the markets on the Fed. Today, the markets have priced in a little bit more of a chance. If you look at index swaps, a little bit more of a chance for a Fed rate cut in September, but it's pretty much where we were when we all went home on Wednesday. The other aspect of next week that's going to be important is Jay Powell is speaking twice on Capitol Hill on Tuesday and Wednesday. And if he is moved at all by these employment numbers, we should get some sort of indication. I suspect his main goal is to make no news. If the markets were exactly where they were when he finishes, as they were when he started, he'd probably be very happy.
Job done.
Job done. But then again, everybody else will start talking too, and they will have opinions.
Hey, Liz, I'm just looking at the two-year Treasury here. We're down about 9 basis points, 4.61%. As Tom Keene would like to say, it was just a cup of coffee ago. And we were at 5% here. What is a move like that? Does that tell us anything? Is that notable, or is that just buyers and sellers out there?
No, I do think it's notable. And I'm like, after I get off, I think I have to update our story because the market extended its lows in the twos. But I think it is notable because remember when we got above 5% again, there was the talk and a teeny bit of pricing in like, oh my goodness, could the Fed have to maybe hike again, right? Remember when that was in the zeitgeist? So that got quashed a while ago with the last Fed meeting that it looked like, hikes are off. And as this data keeps coming out, we're shaving hairs. Like, oh, is it going to be September, November? I think right now, even though the Fed's dot plot only said one cut, it was a close call. I think the market kind of breathing like, okay, there's got to be some easing. Now, we could all be wrong, right? We've had these years before where things don't pan out and the data changes, the Fed will change. But I think that move in the 2-year is important. It shows you people kind of taking off that other tail risk that inflation, remember the first couple months of the year, inflation was looking really hot and that's gone away. So I think the tail risk of really escalating inflation, a Fed maybe has to pivot to tighten, it's just kind of been killed, right? So that 2-year going down further is a good sign. It's saying, but it can't go too much further unless bad things happen for the economy, really bad. Because like Mike said, we're priced for about 2. If we continue to have kind of this immaculate disinflation and slow labor market easing, I don't think the Fed will have to do much more than that, right? So that's, I think, why the market is kind of inching down lower in the 2-year, but it can't go too far unless we get some really bad signs or see we're in recession, which we're not there yet.
Liz, I hate to keep bringing it back to politics, but there had been inflows when we got the shock from France, and I'm interested as to whether there's any viewpoint on what's happening is the US is still a game in town that people see for want of safety.
Yeah, exactly. I think the thought, remember, we've had some different phases where people saying the treasuries aren't the safe haven anymore. I think they still are. And Caroline, like you're saying, I think you did see some flows in because, and now that political risk is eased a bit. Well, we have that second round election this weekend, right? So, one of the investors said to me, people seem to want to be long treasuries into this political risk, not just President Biden's interview today, but like you said, what's going on in France. So I do think you're seeing some incremental movement into treasuries for that. Not like moving the market a ton, but it's there. Yeah, and let's see, we're slowly getting through, wasn't this the year of like record amount of elections? So it means slowly, I guess after November, we'll be through the worst of most of it. But yeah, I think Treasury's getting a bit of a haven bid overall from that.
The funny thing for the markets is the oat market knows what it's going to be, what it's going to have on Monday. Gilt market knows what it's going to have now, and we got 4 more months of this. So
yay!
If you're trading on politics, you've got
I like the whole idea
ahead.
of snap elections. That's a cool idea. We should have thought of that one. All right, very good. Michael McKee and Liz McCormick, Bloomberg News, the smart voices in the room. Help us break down kind of what we saw from the labor market here today. Again, the headline number coming in, people seem to have jobs. The unemployment rate did tick up. Is it enough for the Fed to say, oh, maybe we need to start thinking about rates here? And again, we did see some movement in the rate market. The 2-year really sensitive to the rates in terms of the Fed, 4.61%, down 9 basis points. Coming up, we're going to back into Aix-en-Provence Economic Conference in France. Pascal Donahoe, Eurogroup president, will join us next to give us the latest on the outlook for the Europe. Again, more elections coming up with France on Sunday. And I forgot all about tonight with President Biden. He's got that ABC thing. There's a lot going on out there, people. This is Bloomberg.
The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New episode Wednesday on Bloomberg Television.
Political risk. One down in the UK, one to go Sunday in France. But there's plenty of economic impact that's currently occurring in Europe as well, amid what has been a very political narrative. We want to dovetail both together. We can do that over in Aix-en-Provence, the economic conference. Pascal Donahoe is the Eurogroup president. He's sitting down with our one and only Caroline Conan. Take it away.
There's not a lot of political figures here in Aix-en-Provence this year, but we do have Pascal Donoho, the Eurogroup president, who's joining me now from Aix. Very nice to be with you.
Good afternoon. Thanks for having me on your program.
First, let's actually discuss these comments from German Lindner, the German finance minister, who was saying it may actually be illegal for the ECB to intervene if there's political turmoil in France. What's your reaction to this?
Well, the ECB always act inside their legal mandate. They have in the past, they will in the future. And the ECB monitor, as we do, what is happening in financial markets. But the financial markets at the moment are clearly stable. The French economy, from a debt and borrowing point of view, is still stable as well. And I know the ECB will both monitor the situation and always be inside their mandate, as they have clearly demonstrated in recent years.
So do you disagree with these comments where they're out of place?
Oh, I can understand why Minister Lindner made those points. He is, of course, monitoring what is happening within France. He's monitoring the debate that's underway from a public spending point of view. But as president of the Eurogroup, I'm aware of the need to take a perspective of what is happening in France, but also to recognise that our institutions have very clear mandates that they live within. And the ECB, whether it would be with regard to France or any other element of the euro area, are absolutely clear about what their mandate is, and always, and have always, operated within it, and I'm confident will continue to do so in the future.
So do you think France's political difficulties will actually create any issues with the ECB?
Well, I'm very much aware that there's an election that's just about to conclude in France. So I don't want to prejudge what will happen here in France, particularly as the people go to make their final decision here on Sunday. But do allow me to make a general point. And the general point is that we all have a responsibility to manage our public finances carefully and safely. That has happened here in France in the past. And the maintenance of that approach is ultimately what allows our economies to grow again, and what ultimately would also allow incomes and living standards to increase at a time in which we're still dealing with the effect of soaring inflation.
Obviously, you've been president of the Eurogroup for many years. You are a counterpart of Bruno Le Maire, the French finance minister, who's been the French finance minister for 7 years since Macron's first election, providing a lot of stability, obviously, in terms of the relationship with EU partners. How do you think that's going to change going forward?
Well, I have to say that Minister Le Maire has been an exceptional colleague. He has led the French economy through so many great difficulties, but I also see him as a leader of Europe. And the difference that he has made at really important moments within the Eurogroup has been immense. And I've really valued my friendship with him and wish him the best in the future.
Are we facing a Liz Truss moment, a debt crisis potentially in France, like Bruno Le Maire has been warning?
Well, again, just allow me to make the general point that we have learned that when domestic decisions are made, financial markets can respond back quickly. And the general clear learning that we have in recent years is about the importance of maintaining market confidence and the importance of maintaining confidence in your future spending and taxation plans. And all governments are aware of that, whether that be the Irish government that I'm a member of, or I'm sure any other government that will be elected.
Obviously, there is an outright majority of the National Rally in France. There is Jordan Bardella, who might become Prime Minister next week. Do you feel some clashes with the EU on fiscal rules as soon as this fall?
Well, I think we should just let the election conclude and allow the French Parliament to form the next government. That's very much a matter for them. And I'm not going to comment at this point on what is still, obviously, a domestic political choice. But again, I'll make the very broad point that cooperation between the Commission and Member States is a really important ingredient in continuing to maintain stability of the euro area and all the members of the euro area. And France has been a really important partner in that approach over the entire history of the euro. I look forward to working with the next French government. I look forward to working closely with future finance ministers of France and doing all I can to make the case for this approach to our public finances and the value of the stability of the euro. And I look forward to a good working and personal relationship with whoever that minister will be.
But, for example, Jordan Bardella has said he wants to cut contributions, French contributions to the EU budget by 3 billion euros in order to finance some domestic proposals. Is that even possible?
But these are the kind of comments that all kinds of different governments make before negotiations begin on the next EU budget. And I'm certain that you will hear many other governments make points regarding them wanting to reduce their contribution to the EU budget or looking for more from the EU budget. So again, let's just allow a new French government to be formed, and myself and all colleagues within the European Union look forward to doing our best to having a warm and cooperative relationship with them. But let's let the election conclude.
It seems like the relationship with Giorgia Meloni, for example, in Italy, has improved. Do you think Marine Le Pen can be compared to Giorgia Meloni, or is she much more anti-EU?
Well, I mean, I think the experience of Prime Minister Meloni in many ways is instructive for the discussion that we will be having here in the future. Prime Minister Meloni has came into office and made some very, very important and I believe right decisions on behalf of Italy, on behalf of Europe, and we have a very constructive economic relationship with Minister Giancarlo Giorgetti, her finance minister. So that is another reason why I am reminded of the value of letting the election come to an end, and when the government is appointed, hearing from them and doing all we can to have a good cooperative relationship.
One quick question on the UK, because obviously we had this stellar victory by the Labour Party with Keir Starmer. Do you think this also has links to what we're seeing in France? Basically, this Labour victory as a signal of, anger after 8 years of consequences of Brexit.
So I think that is definitely an interpretation of it, that the promises that were made with regard to Brexit, many of them in the eyes, I think, of British people have not happened in the way they would have expected. But I'd actually interpret it in a more positive and optimistic way, which is that we are seeing the British government, the British people, make the decision to elect a stable and centrist government. With the majority the Labour government will have, with the kind of people that are leading it, it appears to me the British people have said we want stability, we want competence, and we want a government that can lead the UK for the next 5 years. And I think that's a very positive signal, while of course on a personal level, I wish all the members of the outgoing government the best for their futures.
Finally, one really quick question on Ireland. The Ministry of Finance actually just moved the date of your budget to October 1st. Does that mean we are likely to see elections in Ireland this year?
I'm afraid to disappoint you and tell you the answer to that question is no. I expect the next general election in Ireland will be March of next year, at the end of our mandate, at the end of our parliamentary term. The only reason the budget was changed by a week is we have the Eurogroup and ECOFIN meeting happening in the second week of October, and I can't be in Dublin and Brussels at the same time. So it was changed for that reason and that reason only.
Many political battles to juggle. Thank you so much,
Thank you very
Pascal Donoho, the Eurogroup president, live from this economic conference in Aix-en-Provence.
All right, that was Caroline Koenig, Bloomberg News over in Provence. Speaking with Pascal Donohue, Eurogroup president there. Hey, how about a stock story for you, Caroline? Meta, or us back in the day, Facebook, up 4.7% today, all-time high. How about that? I kind of had, we talk about Amazon and Nvidia and this and that. I kind of forgot about Meta.
It's been one of the best performing.
Yeah,
and
exactly.
I'm pretty sure it's just risen on the back of the fact that Mark Zuckerberg was hydrofoiling in Lake Tahoe on the 4th of July, sipping a beer, right? That's the only reason it's
AI, in my opinion. I'm not buying that at all.
I feel that must be artificial intelligence generated, but so far every story I've read about it doesn't seem to say that it's AI. It's just Elon Musk throwing shade on it. But
I don't know. But he's carrying what, a beer and a U.S. flag while like wakeboarding. So I mean, how about that? Stocks up 50% year to date is Meta. It's got a market capitalization of $1.36 trillion. That gets your attention. Coming up, political upheaval continues. France it enters the final few days of campaigning. We'll discuss the complicated path to power for Marine Le Pen.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends. And I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Power, money, culture. Haslinda Aman tells the story of Asia's rise through the people who are helping to shape it. This week, with the drive of winning over a new generation of fans and players, Live Golf CEO Greg Norman is shaking up the game.
The best players in the world, on the best golf courses in the world, in the best cities in the world, it's very easy to get that multiplying factor to move out.
Latitude, encore presentation this weekend, only on Bloomberg. The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Welcome back here. Caroline Hyde, Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We're also simulcasting on Bloomberg Television and streaming on that internet thing. So head over to, I guess, that youtube.com and search Bloomberg Podcast, and that's where you'll find it all. That works for us. Politics, boy, front and center for these markets. No question about it. We had the UK election yesterday. We've got the French voting over the weekend. And then here in the U.S., I think we have two candidates. I'm not sure. I guess we will figure it out over the coming days and weeks. But in France, that's where the focus goes right now. Election coming up this weekend, this Sunday. Could be some significant movement there. Caroline Conan, she is still in the south of France, and she is still reporting for us. Caroline, can you frame out what the French people are going to do on Sunday? Where could this thing go?
It's actually very interesting because, you know, I've been covering this economic conference in Aix-en-Provence for at least a decade. And usually this is the beginning of summer, you hear the cicadas, everybody is in a positive mood. Not this time. Today is the last day of campaigning for the snap elections on Sunday. There is a lot of anxiety on everyone's faces. All these executives wondering what's going to be the outcome on Sunday. And for the first time, there's actually no politicians here. So no ministers from Macron's government, because obviously most of them are going to lose their jobs on Sunday. Now, the prospect of an outright majority of the national rally is a bit unlikely now, given the recent polls actually showing that the national rally would get between 190 to 250 seats. that would be short of a majority, but still, there is still a lot of concerns about potential clashes with the EU. I had the Institut Montaigne director telling me earlier today that there's no need to despair, but there's going to be a lot of attention for the budget in the fall. And also, I had the CEO of Neoen, big renewable, who's very concerned about less focus for energy, less focus for renewable. I even had a SIA Partners executive who was telling me, 2 months ago, Macron was organizing this big Choose France summit, inviting hundreds of international CEOs, talking about the attractiveness of France. Now the question is not choose France, it is why France?
Well put, Caroline. And what's notable is Marine Le Pen of the National Rally has been doing some interviews, and it feels as though she's basically saying, like, don't believe these exit polls. I still could have a chance of having a majority here. But she's also warning, basically, that the country's going to be at a standstill until Macron is legally able to dissolve parliament in a year. And so is that what businesses brace for? Is that what other politicians brace for? Just nothing?
It's actually possible, and in fact, gridlock is possibly the best scenario for the financial markets, at least. That's what we've been hearing from all the analysts and strategists over the past few days. Even Morgan Stanley, a strategist, saying yesterday it's time to buy French stocks because actually, even if it's outright majority for National Rally or if it's gridlock, this is going to be a positive story for French stocks. We'll see the situation on Monday once we get the results in. But clearly, we had more than 200 candidates pulling out of the race for this runoff in order to try and block the National Rally, in order to try and have only duels on a Sunday in many of these constituencies. There's going to be a lot of question also about what the moderate centrists do. Do they actually support a far-left candidate when there is a far-left against a far-right in their constituencies, or are they going to abstain? That's a massive question for the moderates because they have a big dilemma when they have to choose between the far-left and the far-right. Emmanuel Macron has already ruled out he would govern with a far-left candidate. So potentially, if it's not an outright majority for the National Rally and we get a hung parliament scenario, he may reach out to a center-left personality, and that would be obviously the least scary scenario for the markets.
Caroline, this weekend, how far to the right do you think Marine Le Pen can actually move this government?
Yeah, I mean, technically, the question is, what is she going to do on foreign policy? What is she going to do with Russia? She's been trying to distance herself from Vladimir Putin over the past few years. But, a few years ago, she did receive a loan from a Russian bank. So there is a question on defense. There is a question on what it means for Ukraine. Then, of course, the next question is how big of a showdown could that mean between France and the EU, especially for the budget in the fall. Jordan Bardella, the National Rally president, has said he would cut French contributions to the EU budget by at least 3 billion euros. Even if that's technically difficult, that clearly shows you that there is an anti-EU feeling within the National Rally, even if Marine Le Pen is not talking about the Frexit anymore, like she used to back in 2017 when she faced Emmanuel Macron in a presidential election.
Conan, doing, well, the best of work in 40-degree heat. We truly appreciate you working what is going to be a long weekend as well. Caroline Conan on the ground in Aix-en-Provence. And Paul, we bring it back to politics close to home as well. As we sit here in New York, President Joe Biden is basically looking to quell those ongoing concerns over his age following last week's presidential debate. Bloomberg's Anne-Marie Horan, of course, sat down with the Ukrainian president, and we were just talking about Russia, Ukraine, and the impact with France. But what did the president of Ukraine have to say about who will take the Oval Office? Take a listen.
You're 46 years old. Would you do your job at 81?
Oh, wow. I don't know. It depends on many things, of course. It depends on your health and who is around you, your team, and etc. And the United States now not in war. I think being in war is a little bit and other things. I don't know. I only can to wish good health.
You seem to skirt that one rather expertly, Joe Matthew. Let's bring in Joe Matthew as we, of course, see what the international view is on President Biden's ability to continue to run as the Democratic nominee. But also, ultimately, we get some proof points with an ABC interview later today.
Yeah, and don't ask me what I'm going to be capable of at 81. If I'm getting out of bed, I'd say that's a win if I'm upright. But look, it's a big test. It's going to be a week-long kind of a test. They've set up an obstacle course, essentially, for Joe Biden to run the track here and show people that he can do it. And you're right, it starts with this interview. They're going to do it in Wisconsin, where the president is also holding a rally today. He'll have the panels up. He'll have the teleprompter, which we keep hearing is not good enough. So this unscripted interview is part of it. I'm really curious, guys, to see how long this goes. Does he give Stephanopoulos 45 minutes, or is this a 10 to 15 minute kind of conversation here? Do they do the walk and talk? How difficult would these questions be, knowing that this is a former press secretary to Bill Clinton who's doing the interview? The administration, the campaign, very careful about selecting the venue here and the interviewer. Next week's going to be a different story. He's going to go to Philadelphia over the weekend, and then next week it's the NATO summit here, and you can't fake that. That's time to be real president, as you talk about, with the world watching, world leaders here in Washington, and he's going to hold a solo news conference at the end of that summit. And that's a difficult environment to control. This isn't going to be with another world leader. It's not going to just be two questions. And that will be a chance for people to see Joe Biden again a week from now with probably a lot less rest and a lot more stress following those NATO meetings. So let's take this 1 week at a time, even as people start talking about who might else be considered a potential candidate for the nomination.
Hey, Joe, is there any sense in Washington that maybe the Democratic Party might be working maybe a parallel path at the same time here, such that if we come from a week from now and it does not go well for the president, that the Democratic Party is ready to go to that next step? Is there a sense that there's stuff going on in the background?
Well, there is, but I think if you asked Kamala Harris, she'd say, you're talking about me, right? Because, you know, even the night of the debate, we were hearing names like Gavin Newsom, who was on the air with us, Gretchen Whitmer, you know, various Democratic governors who could take up the mantle here. But Kamala Harris has a pretty good story to tell, and in fact, better polling numbers than Joe Biden in some cases right now. And I think that if we were in a world in which, you know, the elders, say Obama and Clinton, sit down with Joe Biden, or Jill Biden convinces him not to run, the first person he will likely look to is Kamala Harris, as opposed to wiping the slate clean and starting with some sort of mini primary, as some have suggested. If it is, in fact, you know, a backroom deal where Joe Biden steps down, takes Kamala with him, and we have a whole new ticket out of the blue, you know, you're going to hear rigged, you're going to hear corrupt backroom negotiations, smoke-filled rooms. I don't think the Democratic Party is looking for that right now either.
We do things with an economic and market leaning, of course, Joe. And to that end, has there been anything factored in on the fact that the market is really trying to understand whether or not we see a more difficult fiscal position, no matter who comes into leadership? What have you made of sort of corporate America's reaction? There's been a lot from donors in particular.
Donors who in many cases are looking down ballot, which is really interesting. Although I will remind everyone that Joe Biden had a real solid fundraising period after the debate that was supposed to be such a disaster that brought us to this moment now. You know, they made $38 million in the 4 days starting on Thursday, which is pretty impressive. It's more than he's seen in some months' time here. So, look, I don't know if the market is too concerned about which Democrat we're talking about here, if it's a Joe Biden, a Kamala Harris, or somebody else, as much as that realization on Thursday night that, hey, this Trump 2.0 idea could be real. And to see things like solar stocks moving, to see banks moving, to see people try to place bets on what could be a return to a Trump presidency has been pronounced.
Joe, do we know who really has the ear of President Biden? Is it Jill Biden? Are there some folks there that we're not aware of? Is it former President Obama and or Clinton?
I think Jill Biden is probably the answer to that question, and I don't think we all prepare to be, in the inner circle there. But he's had a strained relationship with Barack Obama over the years, and look, this is a family that's very tight. When they went to Camp David to have the photographs taken with Annie Leibovitz last weekend, it was reportedly Jill Biden and Hunter Biden who convinced him that he needs to stay in this race and that this is, in fact, the right way forward. It's probably going to take a realization inside that close family circle or a reckoning based on what happens over the next week or so to decide what he does next. But the administration is trying to check itself as well here. Karine Jean-Pierre held a very difficult news briefing on Wednesday in which she said the president had not seen a doctor after Thursday night. It turns out he had. And one of the spokespeople for the White House had to come out and clarify that yesterday here. I'll also remind everybody that lawmakers return to Washington next week, and we've got a third Democrat in the House now, and Congressman Seth Moulton calling for Joe Biden to drop out of this race. What are those numbers going to look like after everyone gets an earful at the 4th of July parades and picnics this weekend? This is all you better believe anyone is hearing about in their home districts. They come back Monday night, and a lot of them could be swinging, and that could really be an interesting backdrop for this NATO summit that the president's trying to conduct at the same time.
Joe, I hate to ask hypotheticals, but hypothetical I'll ask. When, if we hear something, would it be?
Great question, and I can't pretend to know. I'll remind everybody that in just, 13 days, we have a Donald Trump accepting the nomination in Milwaukee. We're going to be getting on airplanes next week to go cover the RNC. He's going to have an announcement on a vice president. That's going to suck up a lot of the oxygen out of the room. So I suspect that might buy Joe Biden another week or two as well. It's mid-August, the Democratic convention in Chicago. Is that the deadline? I'd say that something probably needs to break before then. If we're taking this a week at a time, let's see where we are in that news conference next week.
All right, Joe Matthew, thank you so much. We appreciate that. As always, Joe Matthew, he's co-host of Balance of Power. He is our one of our key voices down in Washington, D.C., and what a time it's going to be here. And I think the way Joe's looking at it week to week, let's see, he's got some big events coming up in the next week that'll give people probably more data points, and probably himself as well, more data points about what to do going forward. So I guess that's kind of where we are here, week to week.
I was at a July 4th party yesterday, and a friend of mine had a T-shirt on saying "a bad day to be British." Obviously, he meant about 4th of July. It was ironic that there was the British election going on at the same time. And then I woke up to the news with the fact that Keir Starmer, in his 60s, he's 61, is the oldest ever first-time running prime minister.
Is that right? Well, boy.
In your 60s, that
exactly
to be your first time is. I mean, obviously, Winston Churchill did it till a grand old age. This is Bloomberg.
All right, we're going to have much more coming up on the UK election. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New episode Wednesday on Bloomberg Television.
People People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
We can make a start today with the simple acknowledgement that public service is a privilege. From now on, you have a government unburdened by doctrine, guided only by the determination to serve your interest, to defy, quietly, those who have written our country off. You have given us a clear mandate, and we will use it to deliver change.
All right, that was UK Prime Minister Keir Starmer. Day one here after that landslide victory just over the last 24 hours. Just amazing move there in the UK. We're now awaiting another election in France as well this weekend. So very busy on the UK front and on the European front in terms of change in governments across the board here. So that is a lot for investors to keep an eye on. And UK markets, they're advancing here on this Labour move. We have the pound to its longest winning streak in 4 years. So definitely some movement in the markets. Dan Hansen joins us, Bloomberg Economics. He is in London. Dan, what's your view here of what we just experienced over the past 24 hours in the UK politically?
Well, I think, to be honest, my take on it has been it's been a very sort of predictable election. Like, this is a result that was widely expected, and it sort of marks quite a big change from what we've had in the UK. Sort of in the 2019 election, 2017 election, and really ever since Brexit. So I'd say there feels quite a bit of calm, and you can see that there, sort of in the market pricing that you've just shown, that markets are taking it in their stride, because this result really was priced in. And this idea of stability, and you got a bit of it there from what we heard from Keir Starmer, is really Labour's pitch. It's sort of taking government out of the public's eye, being in the back seat, but ensuring stability all round, and hoping that will be the source in future of stronger economic growth.
Extraordinary to think that actually British stocks are still near a record high. Obviously, FTSE very internationally focused, but bond volatility has been quelling. Volatility is basically what we're talking about. A less volatile government situation, a clearer majority, a leader that is ultimately able to lead. What does that mean economically for the UK and for a Bank of England that has been eyeing further rate cuts, has got a grip on inflationary pressures?
Yeah, it's really interesting, Caroline. So I think in the near term, when I say near term, I'd probably say over the next 6 to 12 months, I think the new government is going to benefit from a pretty decent economic picture. You know, growth has picked up in the UK. We had a recession, a very mild recession at the end of last year, but growth has picked up. Inflation's in and around 2%, as you alluded to there, and I think the Bank of England is pretty close to cutting interest rates. I think, you know, our view is that they could well go for the first cut in August. I think the question really for investors is about the medium-term picture, because the election campaign, at least for Labour, was very, very modest in terms of their promises. And the question, I think, is can they really deliver a step change in the UK's economic growth, a sustainable step change in the UK's economic growth? And that really is the question everyone's asking. But in the near term, I think the picture's pretty positive, and I think, you know, we're going to get Bank of England cutting interest rates relatively soon.
So, Dan, that's kind of where I wanted to go here. The new Prime Minister talking about growth being one of the pillars here. What, from an economic policy perspective, can this new government really do to spur growth in the UK?
Yes, I mean, great question, Paul. So I think one thing to remember in the UK, and this is true across Europe and in fact across the Western world, that fiscal space is extremely limited. And the manifestos that we saw from both the Conservative Party but also the Labour Party reflected that fact. So a big part of the pitch, as I said in the answer to Caroline's question, is about stability and the hope that there is, if you like, there is this relative, I would call it, certainty premium on the UK, because if you look around the world, in Europe, you spoke about the France election at the top of the show there, I think there's a lot riding on the idea that the UK is going to be seen as a bit of a safe haven, if you like. So I think that will get you some way. Whether it gets you a sustainable path of growth higher, Keir Starmer's talking about 2.5% growth for the UK. I think that looks quite optimistic to me. But nonetheless, there is going to be a benefit, I think, at least in the near term, a sort of cyclical boost to the economy from that, a reduction in uncertainty.
I mean, they've been trying to lean on artificial intelligence, a leadership there when it comes to regulation, whether or not there's a leadership from an actual enactment and productivity perspective. But what's interesting, Rachel Reeves, the new Chancellor, as we understand, promising not to basically raise the 3 key taxes, but she does seem to be wanting to focus in on housing. They're going to have a new sort of national publicly owned energy company, and energy was a lot of the inflationary pressure. But would a reset of the relationship with the EU be one of those fuel to the growth fire?
I think it would be. Now, and I think the question is, first of all, has the EU got the appetite to come to the table and talk about it with the UK, with everything else that's going on within the EU itself? But I think also, there is definitely a case there for looking at bits of the deal that the UK currently has with the EU. The point and the question about, I think, a customs union and maybe returning to the single market, that's probably too far-fetched, I think. But I think there are bits of the deal that could be looked at around alignment, around regulatory alignment, that could produce a growth benefit. But I think the one thing to remember with trade deals generally is that they take an awful long time to adjust and change. So to sort of bank on that as a source of growth, particularly in the near term, I think that's probably far-fetched. Maybe, over the 5-year Parliament, that might be something, we can think about further down the line.
It's been great speaking with you, Dan. Thanks so much. Go get a pint. Dan Hansen from Bloomberg Economics. We appreciate him. And meanwhile, Paul, look, we've got to talk retail, right? We're going to be discussing how closer to home maybe the wealthiest are still able to spend, but we are getting that sort of slightly strained middle once again. And it's meant that a lot of these luxury department stores are trying to eke out efficiencies. We understand today Macy's actually rising on the report that Ark House and Brigade have raised their buyout offer for the department store operator to $6.9 billion. We've also got Saks, Neiman Marcus, a deal there going through potentially. Andrea Felsted, Bloomberg opinion columnist, joins us from the UK once again. We're making these Brits work the day after they voted. Andrew, just remind us of the driving force for wanting assets like Macy's, which of course owns Bloomingdale's.
Well, Macy's is quite a special case because it's got a lot of real estate. Bloomberg Intelligence have estimated it's got about $8 billion of real estate, and that really is what these bidders are after.
I should tell you, Caroline, whenever I do look at an M&A story, I go right to MA-Go because I need to see which bankers got paid here. So on the Saks deal for Hudson's Bay's, Saks advised by Bank of America, Merrill Lynch, and RBC Capital Markets, and the seller, Goldman Sachs, Guggenheim Partners, and Morgan Stanley. So everybody's getting paid there. Andrea, what does this tell us about, the consumer retailing trends? I mean, it seems like a lot of consolidation in a relatively short period of time here.
That's right. The thing about the department, there's 2 things going on. You've got the department stores are under a lot of pressure. We are shopping online. They've also got tons of competition. Years ago, you just went to a department store for your autumn wardrobe and your spring wardrobe, which you bought in advance of the season. Now that we're buying online, the brands are going direct. They've got, their own websites. They're opening stores, and not just in the 2 coasts, in sort of middle America, all across the country. They've got their own stores in malls. Plus, you've got these online challenges. Even luxury resale is growing. So there's tons of competition. Plus, the luxury consumer is under pressure. And we're not talking about the very wealthiest. They're still splashing on Hermes handbags, Brunello Cucinelli cashmere. It is that squeezed middle, the cohort that during the pandemic, they saved a lot of money. They weren't going out to eat. out, they weren't traveling, they were spending that money on Gucci handbags, Rolex watches. Not only are they now want more experiences, but they're also facing inflation and higher borrowing costs. And it's really that cohort that is squeezed. And that's a lot of pressure for these businesses to cope with, hence the consolidation.
Andrea Felsted, we love having you on. Thank you so much, bringing us all things consumer. Meanwhile, Paul, I actually rent most of my stuff.
You do Rent the Runway?
Yeah,
That is a great idea.
Great idea.
I never even thought about it, but it makes so much sense.
Their market cap might not reflect how great a business I think it is, because Rent the Runway has, I mean, it IPO'd in excess of $1 billion. I mean, its market cap now, but $54 million. I mean, it is absolutely eroded.
Was that because people aren't going back to work as much?
It's actually, I think people are using it. It's such a hard business model to make square in terms of a margin. You know, they're having to ship. I get everything of mine cleaned. I'm getting like 5 or 6 outfits every week. I don't know how they make money.
I don't have, it is. It's a cool idea, though.
It is. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Power, money, culture. Haslinda Aman tells the story of Asia's rise through the people who are helping to shape it. This week, with the drive of winning over a new generation of fans and players, Live Golf CEO Greg Norman is shaking up the game.
The best players in the world, on the best golf courses in the world, in the best cities in the world, it's very easy to get that multiplying factor to move out.
Latitude, encore presentation this weekend, only on Bloomberg. The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know the areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Welcome to our Bloomberg TV and radio audiences worldwide. This is Bloomberg Markets. I'm Caroline Hyde alongside Shonali Basak.
Absolutely. And Caroline, we have quite the day here. It was supposed to be a boring day, wasn't it? But we are looking at a day here where you're seeing still a bit in the market, and certainly the bond market after some stunning data, plus a lot of things to talk about on the geopolitical front with elections abound.
You name it, we're going to be on it. Meanwhile, we're going to talk a bit of crypto as well. Let's get to the markets for a moment, though, because, well, there has been actually a bit of a rally on our hands, all thanks to, of course, what seems to be an ability for the Fed to continue to cut into the rest of the year. Maybe even September on the table. We'll see. We'll discuss it with Mike McKee. But for now, we've seen tech stocks see a bit of a reprieve, a relief. Look, it was the revisions that people were slightly worried about into the previous reading of non-farm payrolls. NASDAQ currently up 0.8%. The bond market moves significantly, particularly at the short end. I'm shining a light on what's happening in the 10-year, down some 8 basis points. But you keep a keen eye on what's happening with the 2-year, screaming in some 9 basis points, let's call it once again. We're talking British pound, of course, UK elections, some lack of volatility for the future. Keir Starmer wins with a landslide majority. The pound goes higher, the best performing currency on the G10. I'm looking at crypto, though, currently down 2.8%. Look, it's off of our lows, but still there seems to be pressure, selling pressure, maybe from Mt. Gox, selling pressure, maybe from the German government. We are currently trading lower, the lowest since February. Move on to what the S&P 500 is up to, because remember, we have been at record highs time and time again. The S&P 500 basically up 0.3% on the day. Volumes muted as we have the party after the party of July 5th. I'm also keeping an eye on what's happening with Eurozone stocks, though, and we're currently seeing the MSCI UK ETF. That's up 0.4%. Eurozone also had been trading high. The euro is up 0.1% versus the US dollar as we head towards that French political moment on Sunday as we see that second round of voting. Gold, maybe a bit of a safety trade. We're up more than a percentage point as we see perhaps a little bit of weakness in the US dollar. But we've got to get to all of this, Shonali, with one key economist in our midst.
Our in-house economist, aren't we? That is Bloomberg's Michael McKee, who is joining us on the heels of that jobs data this morning. And we were talking about how we are looking at a bid in the bond market as strong as to push the 2-year yield down to a stunning level of 4.60. But as you pointed out to us during the break, that doesn't mean everything, does it, when it comes to the rate cuts?
Well, at this point, investors are still cautious because they've got a lot of news coming up next week that could influence this whole September debate with CPI and Jay Powell twice on the Hill. But we are seeing a gradual move in Fed funds and overnight index swaps in terms of pricing in September. We were at about 70 basis points of a move in on Wednesday when we all went home, and now Fed funds are at 84 basis points, and the OIS are coming in at 77. So a gradual creep into September is what's been happening now. I suspect we'll hang around this level, and then as we get into next week, people are really going to have to be ready for some big moves.
Big moves when we look at the CPI and indeed Jay Powell. What we were all reeling from Wednesday was the services print that was much weaker, well, at a 4-year low. Is there any worry coming from the market yet that this could be quite a significant slowdown, or is this like a Goldilocks slowdown that we seem to be hitting?
So far, it seems to be Goldilocks. The price that we had on bonds wasn't the price that you would put on the economy as we have it now, or at least as people believe it now, so they adjusted. But nobody at this point is thinking the economy is going to fall off the cliff. We saw weak hiring in the services PMI, and then we got weak services hiring in the jobs report. So it all kind of reinforces itself here. The question is, do we continue to see a slowdown, or is this kind of about what we're going to have?
Mike, what do you think that the jobs report means in terms of the totality of the data that we're bringing in?
It's the second most important thing behind the inflation indicators. And the most important inflation indicator is going to be CPI this month because, A, it comes out a lot earlier than PCE, and B, it's much more detailed and easier to break down where the inflation is. It's not the target. The CPI is not going to get to 2%, but it will tell us which direction we're going, how fast, and that's what the Fed wants to know, that we're still making progress, and they would love another month like last month where it picked up.
We'll see, indeed, what we do get from a CPI print coming next week. Mike McKee, all over the numbers, the data for us, and indeed a bit of the market reaction. But where do you invest in when you're seemingly navigating towards a Goldilocks slowdown here in the United States, we've got the perfect voice for you. What a stellar career. Michael Green, Chief Strategist at Simplify Asset Management, joins us for more. And I mean, I'm really interested, Michael, in your take. You're really thinking about how we can increase, well, access to investing, particularly through cheaper ETF options and the like. But your take on ultimately how we have seen this played out. We're seeing a bond move today, but are stocks still going to be at these record highs as we do navigate what is this slightly cooler U.S. economy?
Well, I think there's a real bifurcation, unfortunately, in the market, where when you describe stocks at all-time highs, that's a very narrow description. Within the S&P itself, you're actually looking at the equal-weighted S&P, effectively flat on the year. A very small number of stocks have navigated this advance. If we go back further, we look at small cap stocks and do something as extreme as look at the median stock in the Russell 2000. It's off 20% from its highs in 2021. So this recovery in stocks at all-time highs, I think, is actually a misleading statistic. It's very focused in a few stocks that are both very large and in no need of capital. If you happen to need to borrow money, if you happen to need to issue shares, if you happen to need to get your private business public for liquidity purposes, these markets are largely shut.
Unless you're an AI company, of course, and therefore...
Unless you're an AI company. Right?
And I'm interested as to whether we start to see that spread. Many have been talking about investing in energy and infrastructure because that's the other sort of spin-out effect of artificial intelligence, whether or not we get that productivity boost, which might indeed impact jobs in the longer term. But, Michael, how have you been playing the narrowness of the bets of AI, and can they expand?
Well, I'll be very straightforward. Like most in my shoes, I've actually been playing it quite badly. So I would encourage you to be thoughtful about that until I didn't have, I guess. No, full candor and disclosure. If I'm looking at the environment that exists right now, this narrowness of the market, this focus on the idea of a build-out of AI is so reminiscent of the telecom build-out and the ISP build-out associated with the dot-com cycle. People are ignoring one aspect of it, which is the processors that are currently being deployed into artificial intelligence, the NVIDIA-type chips, are very power intensive, but there are alternatives being developed. That's the miracle of capitalism and innovation. When we're confronted with constraint, we actually figure out solutions because people pay us for it. And so we're already seeing tremendous advances in terms of reducing the energy intensity of that load. I would expect that to play out in the same way that we saw incredible advances in switching technology that meant that much of the infrastructure that was deployed around the telecom cycle in 1999 to 2000, we ultimately found out we just didn't need it. And it created extraordinary clearing prices that we all benefited from in the future. My hunch is we're going to see something very similar with AI. It's what's called a positive bubble. It's financed an incredible build out. Now we get to see if that build out becomes available to us at much lower cost than we initially expected.
Hey, Michael, how do you think about the play here? If you say that the market doesn't have a whole lot of breadth and you're not seeing all boats lifted in that AI boom, when you're seeing NVIDIA break so far away from the pack and people betting on those big ticket names, how do you have confidence finding other areas to really bet on here when not all boats are rising at the same pace?
Well, the one thing that I continually remind people is you need to invest for your needs, not for the broad needs or the need to keep up with the Joneses. And so we're facing an investing public that is increasingly aged, increasingly looking for security and income. We're being offered that through extraordinarily high real yields on U.S. government tips and various other types of bonds that candidly nobody wants to pay attention to because we've become so accustomed to the idea that you simply save in the S&P 500. That's not saving. That is a speculative investment. Stocks tend to rise over time. It's worked out extraordinarily well. But the easiest thing to do is look at your current financial situation and say, can I actually meet most of my objectives with dramatically lower risk, given the drawdown that we've seen in bond prices and the increase in yields? And a Federal Reserve that candidly is telling us that they are restrictive and going to have to cut. This seems like a fantastic opportunity to take stock of your investment situation and reduce your allocation to equities before others do so for you.
It's interesting because there's a lot of question on how much cash you hold on to in an environment like this where you're still seeing a lot of bullish sentiment, though a lot of fear under the surface. How much do you keep in cash?
Well, I am, as I indicated at the start, I am cash rich at this point. My focus is very much on preserving the opportunity for investment in the future. I think that there are going to be incredible opportunities as people begin to capitalize on the advances that we're making in artificial intelligence. I think that there will be incredible opportunities to reinvent American cities as we watch the commercial real estate debacle play out. Those will all require capital when the time is there. It just doesn't feel that that's right now.
Just looking at your bio is fascinating, Michael, and you were founding and managing the New York office of Canyon Capital Advisors. You were working with managing Peter Thiel's own money, but also with Soros. And of course, Soros, well known for his big bet on the pound that went very right. I'm interested and ultimately on what your view is of US being the only game in town. Thus far, it has sucked out all the oxygen in the room, but we are seeing SK Hynix, you are seeing AI players, Samsung do well on the day. There has been an interest in Asia and emerging markets, ex-China, on the back of AI. Have you seen that anywhere else? Are you looking outside of the United States? Are you people you manage money for doing that too?
Well, we are always seeing interest in people putting money abroad, right? India is capturing a lot of attention as kind of the next China. We at Simplify have funds that are allocated to that. But with that said, I think the kind of most important thing to remember when you start thinking about where do you put your money or how do you think about capitalizing on an international basis is the manner in which we invest has become increasingly systematic and passive. The vast majority of investors by number and now by dollar value are simply putting money into broad market indices. In the United States, that takes the form of total market funds. That means there's no restriction on how small caps can fall as an asset class. We used to think about allocating 10% of our assets to small cap. That meant ultimately that small caps would remain relatively close to 10% of the investment opportunity. When you switch to a total market fund, you remove those restrictions, and the largest stocks can become larger and larger relative to the smaller stocks. The same thing is happening on an international basis. If you step outside the United States and you look at many of the plans, for example, in the UK, or you look in Australia with their superannuation funds, they very typically will be allocated to passive strategies that place no cap on where the U.S. ends up as an investment destination. They're simply trying to stay constant with the market capitalizations. That means that there is really no limit to how large the U.S. becomes relative to the rest of the world. It has very little to do with valuation. It has almost everything to do with the mechanical properties of the system that we've built at this point. And so unfortunately, I think that actually ties very closely to, you mentioned George Soros and the pound. The rest of the world has largely tried to pursue currency stability.
Michael, thank you for joining us. That is Michael Green, who is the chief strategist at Simplify Asset Management, certainly has experience over a multitude of asset classes. And speaking of asset classes, we're going to take a look at a couple stocks we're keeping an eye on the day here, because we are taking a look at Tesla, and it is flirting with green territory on the year here. Very interesting. It has been between gains and losses, down on the day, still down on the year, but pretty close to breaking even for the year. Also keeping an eye on Macy's, because of course there is a report out there of potentially an increased bid, an investor group raising a buyout offer. Keep an eye. We're going to bring you more stocks throughout the hour, of course. This is just the start of it, isn't it, for us, Caroline?
Yeah, I'm going home in a minute, Shonali. I'm going back to the UK. We've got news from the election and what's happening with the Labour Party being back in power. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New episode Wednesday on Bloomberg Television.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
Power, money, culture. Linda Ammann tells the story of Asia's rise through the people who are helping to shape it. This week, with the drive of winning over a new generation of fans and players, Live Golf CEO Greg Norman is shaking up the game.
The best players in the world, on the best golf courses in the world, in the best cities in the world, it's very easy to get that multiplying factor to move out.
Latitude, encore presentation this weekend, only on Bloomberg. The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything.
We're going to turn now to domestic politics. We're going to talk about the U.S. election season, of course, heating up in a big way. And President Biden is sitting down today for his first big TV interview since the debate performance last week, widely considered poor. We're going to bring in Rick Davis, partner at Stone Court Capital, to talk about his expectations. Rick, what are you watching for tonight? Because, of course, all of America's eyes are on this interview, but so are the eyes of a lot of members of the Democratic Party thinking about what to do next, as well as donors for the Biden camp.
Yeah, I think you summed it up pretty well. There's a crisis of confidence within the Democratic Party over the top of the ticket. The disastrous debate performance last week, just 7 days ago, by Joe Biden has caused a lot of donors and a lot of operatives to start questioning whether or not they have to make a change. And this interview with George Stephanopoulos is, I think, really critical because it has to show Joe Biden able to perform without a teleprompter, perform without notes, be able to have a conversation with a very skilled, operator media-wise, but also with a great political background, George Stephanopoulos, who will run him through his paces tonight for an hour-long interview. And honestly, it's a high-risk situation because if there's any hesitation, if there's any confusion, if there's any kind of stilting of a performance like what happened in the debate, I think it really could be the death blow of this Biden campaign. Otherwise, he does have the opportunity to try and reassure people that he has the capacity not just to be the candidate of the party, but also to potentially be president for another 4 years, which is really one of the big questions to be answered tonight.
The reason we turn to you, of course, is because you can so well sew together what politics means for markets, what politics means for economy, and in fact, the fact that you were a campaign manager as well, Rick. And from your expertise on the campaign, how has the Biden campaign managed this? How have they, because they feel united, but it just feels united against a wave that they're working against.
Yeah, sometimes you have to let the candidate, in this case Biden, be Biden. Campaigns are built around the idea of lowering risk. And so it's not unusual for there to be Biden in a bubble, Biden overhandled by staff, Biden overscheduled. All these things are pretty typical in a campaign. But when you do have a crisis, there's no remedy for the crisis other than the candidate himself or herself standing up in front of a crowd, standing up in front of an interviewer, and actually being able to have a successful moment. And tonight could be the most important moment for Joe Biden because, he's coming on a very critical period of time. Summers are usually not this important, but in this case, in this campaign, having been so close for so long, every little step matters. And in this case, this step is a big one, and he's going to have to do it alone. He's not going to have anybody telling him what to say or do. He's got to get out of the bubble and prove to the American people and, frankly, to the Democratic Party that he's the guy they can invest in for this year.
Rick, I'm really curious also, when you look at the interview tonight, how much of it is about the policy, about the progress made during the Biden term and the race itself, and how much of it is about Biden's performance?
I've always been curious, frankly, almost throughout this administration, why the Biden folks haven't focused more on the economy. They've actually got a story to tell here, and yet they constantly deflect themselves into other policy areas, student loans, things like that, that actually don't have the saliency in this election. This election is all about, are you going to be better off in the future than you were under Donald Trump in 2016 to 2020? It's almost like you have to skip over the Biden economic performance, and they seem interested in doing that too. They talk very little about it. I will be very curious to see if Biden is able to articulate tonight the successes he's had in navigating a very treacherous economy over the last 3.5 years, and whether or not he can then lay out a clear vision on what he wants to do in the next term, because that is what most of these swing voters are deciding on, is whether or not their economic self-interests are going to be better under Trump or better under Biden.
Rick Davis, partner at Stonecourt Capital, thank you so much for walking us through what to watch a little bit later. Meanwhile, clear vision is exactly what now the British public want after a clear and decisive win coming from the new Prime Minister Keir Starmer as Labour sweeps to power over the Atlantic. Now, we did hear from the new Prime Minister a few hours ago as he stood outside number 10. Let's just listen.
We did it! You campaigned for it, you fought for it, you voted for it, and now it has arrived. Change begins now.
I stand corrected. That was the Tate Modern. That was earlier, even before he then stood outside number 10, of which he's now taken entry of. Someone who's been following the ins and outs for the hours is Bloomberg's Ewan Potts. And Ewan, there is a read here that we will get calm, less volatility, a clear landslide victory. Isn't it incredible to think that actually we were talking, though, about a landslide in 2019 for the opposite party? And so really, will this signify calm? Will this signify a clarity of thought and vision for the UK?
Caroline, yeah, it is quite the turnaround, isn't it? Amazing what happens in 4.5 years. Now, you may have seen some July 4th fireworks in the US. We had plenty of fireworks in our July 4th election here in the UK. Britain has a new Prime Minister, Keir Starmer, winning with a landslide victory, 170-seat majority, roughly. Just to put that in a bit of context, Tony Blair scored 179 in his landslide back in 1997. So it was a big win for Labour. The key pledge, the key election slogan was one of change. And after 14 years of Conservative government, the British public made very clear they were ready for change. It has been a turbulent 14 years, not just that Brexit vote and all those interminable negotiations with the EU, but a pandemic, the Partygate scandal involving Boris Johnson, and of course the energy crisis and the big inflation spike, much like you've seen in the US. So that's a platform of change went down very well with the British people. He also pledged to end the chaos, to use Keir Starmer's words. So really looking for a fresh start for the UK. It was really a crushing election defeat for Rishi Sunak's Conservatives. The party of Boris Johnson and Brexit categorically rejected by the British people. It was actually the worst election result for the Conservative Party in their history. This party dates back to 1832. So this is a really momentous landslide win for the Labour Party. And as you say, a big, big change from back in 2019.
Ewan, one thing a lot of the world is watching, of course, is not just the changing politics in the UK, but the fiscal situation in the markets as well. And by the way, thank you for being with us and keeping such great energy through all of the coverage that we have seen. Of course, a long day. How have investors reacted to the future of the UK?
Well, of course, the Labour win has been priced in my markets for some time now, not just during the course of the campaign. The Conservatives really didn't manage to shift that poll rating at all during the campaign. They tried spending lots of money. They tried launching lots of new announcements, lots of policy announcements, but that poll deficit with Labour just didn't budge. So the markets have priced in that Labour landslide, the Labour victory now for really the whole course of this year. So investors are expecting this. I think there's a certain amount of optimism in markets that this will bring some stability. It has been a very unstable situation for the UK, particularly politically over the last few years. So I think investors are looking for a bit of stability. But it is a difficult fiscal picture for the incoming government. There is really little money to spend. They've said their first priority will be economic growth. They'd like to get growth back to the 2.5% on average that it grew in terms of GDP over the course of the Blair government in the late 90s and the early noughties. But of course, we are in a different current environment now. So boosting that growth is going to be difficult for the incoming government, but they say they're determined to do that. And they've also sounded a very cautious note on borrowing as well.
Ewan, we thank you so much for joining us late in the UK. That is Ewan Potts, of course, of Bloomberg, covering the election there. Caroline.
I mean, we've got a lot to dissect when it comes to politics. We're going to have plenty across over in Paris as well. But more broadly, we want to be looking at what the market reaction is to the macro, the fundamentals here in the United States. We have indeed been digesting those jobs numbers in June. And look, Goldilocks, many would say, yes, there's a big revision down from the previous month. But actually, the fact that we're seeing a cooling labor market, the fact that inflationary pressure is just dialing back a little bit. We can dig into the nitty-gritty with Stephen Kramer, CEO of WorkJam. That's coming up next. Stick with us. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
The top names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself, actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live tonight, with replays all weekend on Bloomberg Television and Radio. CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New episode Wednesday on Bloomberg Television.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
We're going to to turn to the job market. Of course, Jobs Day was a big day today. It was a big part of the week, big part of the month, and a big part of the story of the Federal Reserve. The market showing some signs of cooling. The jobless rate, of course, rose to the highest since June since late 2021. And we did see payroll growth slowing, but we did have payrolls coming in higher than economists had expected. We're going to bring in Stephen Kramer to talk about the moment we're in. He is the CEO and founder of WorkJam, a digital platform focused on promoting the potential of non-desk workforces. And if you think about the cater of people that you work with here, Stephen, how do you think that they're taking in the data that is coming versus the reality that they're experiencing?
Right, great question. Well, first, let me start off by saying that 50% of the U.S. workforce is made up of frontline workers. And when we talk about frontline workers, we're talking about non-desk workers that are in the field in segments like retail, hospitality, leisure, people that work in distribution plants, distribution centers, and so forth. So while the unemployment rate actually rose to the highest that it's been over the last 2 years, if you dig into the report, what we're also seeing is that there's massive influx of new hiring that is happening on a seasonal basis, particularly in restaurants, hospitality, and leisure, as a result of a surging amount of individuals that are traveling in the U.S. right now. I think that right now, July 4th weekend, it was reported that there's 71 million travelers that are on the road or in the air, and that's a 5.5% increase from last year.
How do you think about this in the context of some of the fragilities that people are worried about in the economy right now? If consumer spending were to slow down more sharply, then certainly those would impact those restaurant revenues and other forms of places where you see a lot of that frontline hiring. Where are the concerns around those fragilities?
I mean, definitely there is some concern around fragility and a lot of attention that will be put towards September when we see the news on the rate increases and so forth. However, the real news story right now is how do you get prepared for what will be probably the largest travel season in history. And so when we think about businesses that are in the segments that I mentioned, it's all about how do you address the hiring needs? How do you onboard individuals very quickly? And how do you retain the employees that you already have? And a lot of that comes down to doing more with less. Mm-hmm. And I think that, to your point, even if there were to be a downturn in the economy and in consumer spending, doing more with less. How do you optimize your labor in a way that you need less individuals on your payroll is a key topic that is being discussed across boardrooms in all these organizations. And that comes down to productivity, efficiency, as well as retention. Right. It costs a considerable amount of money to hire and train a new frontline employee. And ultimately, how do you provide the best consumer experience? Because as we all know, consumers are more fickle than ever.
Is it doing more with AI, therefore?
I think AI is definitely a part of the solution in order to drive efficiencies and workflow automation in the field. It does not replace the frontline worker that is working at a desk at a hotel or an associate that might be working in a retail organization. But AI is definitely a big part of the solution, along with tools that enable people to have clear directions on what they should be doing so that they can shed some time off of that activity, training, upskilling, as well as flexible scheduling. I think the way that organizations need to staff is going to change. Rather than staffing by location, crowdsource the labor around an area.
How does that longer term affect the data that we're currently gleaning from a jobs report, therefore? Are we going to get more month-by-month volatility? Are we likely to see basically a more efficient and effective use of people at the right time in the right place?
I think for sure we're going to see more efficiency. Time will tell how that plays out in the reports, but definitely the Gen Z, as an example, in, let's say, restaurants. There's going to be 500,000 plus jobs that will be added to the restaurant segment, according to the National Restaurant Association this summer. 20% of those individuals will be Gen Z workers. And they're a native digital generation. So the expectation actually is to have more digital tools to do their jobs more effectively. We've actually seen in our customer base that when you don't have those tools for those digital native workers, that you actually have a loss of productivity. So definitely we will see a much more efficient, much more productive workforce, particularly in the frontline space. And I think the time will tell really what the impact will be on the job numbers.
I have a few questions about the near term as well. You know, there are concerns about the market, as we have talked about. The payroll growth is slowing, but you've pointed to a lot of optimism, and certainly optimism is what people are feeling. You mentioned that the travel industry is on the verge of fresh records. Are there places that you're seeing hiring pick up faster than others? Are there areas that are clearly stronger for frontline workers right now?
Definitely hotels. We also have multiple customers in the rental car industry. You could see that the numbers for people that are traveling on the roads and renting cars has increased dramatically. So we're seeing definitely those hotels and certain areas in travel that are having higher influxes of needs. I would say that restaurant is an area as well that is impacted as a result of the number of travelers, right? When we travel, we like to eat out and we like to enjoy ourselves. So we're seeing certainly a large influx in restaurant hiring as well. It's the second year in a row where there'll be over 500,000 workers added to the segment during the summer.
And Stephen, you know, it's interesting because even if you're seeing more in hotels and restaurants, where exactly and what do wages look like right now? Because you've seen so much of an impact on trade down. I'm wondering if when people are looking to travel, they're looking to pay a little less to do it.
They definitely are looking to pay a little less to do it. As far as payroll, we've seen that stabilize. That was a big story that and a big concern of our customers, certainly probably around 2 years ago. It did stabilize over the last 6 to 7 months. And people are looking for deals. And let's just talk about restaurants for a second. Like, what's happened around deals and people kind of paying attention to the amount that they're spending is that particularly in QSR, quick serve restaurants, there is a fierce competitive environment right now. So there's a lot of meal deals and promotions that are going on. All of that has an impact on the front line. The need to have tools to be able to disseminate knowledge and communication and learning down into the field is more important than ever in order to execute and to continue to offer a really high level of customer experience. So although wages have increased, I will also tell you that hiring is still challenging.
Stephen Kramer, we thank you so much. And I mean, tough to leave it on that note, challenging for hiring, but still a focus on productivity, on efficiency, and indeed some very busy people working in hotels this weekend. We appreciate your time, Stephen Kramer, CEO and founder of WorkJam. Look, we were talking a little bit about tech, weren't we, just a moment there with Stephen, and we want to pivot hard into it now and the future of artificial intelligence. It might not be, well, changing the jobs market as quickly as some had anticipated, but in the longer term, many feel it will. Dan Newman's with us, CEO of Futurum Group. We're going to be getting with you sort of ultimately the investment angles on artificial intelligence because they've sucked out all the oxygen in the room when it comes to the valuation story, when it comes to the NASDAQ outperformance and big tech. Will it continue? Is AI and the picks and shovels that is NVIDIA really the only game in town for the second half of the year as well, Dan?
Yeah, I think this is a really interesting question, and thanks for having me back. It's always interesting to sort of see these inflections. In the market right now, it's been NVIDIA, and this week, Tesla. Now, Tesla's the AI play. Now, sometimes when people are down on Tesla, it's an automotive play. When we're excited about Tesla, it's an AI play. But what I've been trying to pay attention to has been the multi-network effects, meaning we saw NVIDIA's run, but who else? And then we've seen Supermicro and Dell take off under the onus of selling lots of NVIDIA. And then we're seeing Micron because NVIDIA needs lots of high bandwidth memory. But I've been asking the question over the last few years as I've looked at how tech should be more deflationary, how it should create scale, as to where does that value enter financial services, media, healthcare, and companies that are taking off there. And what I've come to the conclusion is that software is the missing piece. We've seen SaaS.
But the Salesforce side of things, because that hasn't looked so pretty.
Well, that's exactly right. And so as I've been thinking about this is the consumption layer. So we've seen some of the reports come out. We've got hundreds of billions of dollars, Caroline, of CapEx that's going to be spent on all of these GPUs and AI chips. But ultimately, these are being put in data centers. You got the Microsofts, you got Googles and Amazon selling services in the cloud, but it's these large software providers. It's Microsoft, but it's Salesforce, it's going to be Workday, it's going to be ServiceNow. You and I have talked about all these names in the studio before. And what we are going to see is that people are going to realize you have to be able to consume AI. You have to be able to add value to your sales process. You heard about, frontline work. How do you make interactions between customers and their arrivals at these hotels and at restaurants more seamless and help pick the right products and services? So there's a lot of opportunity there. But in earnings reports, we're not hearing anything about AI driving more productivity, more revenue, more income from any of these companies. We're just hearing a lot of buzz.
Well, speaking of buzz, there was a very buzzy headline on the terminal today, and it was not about NVIDIA. In fact, it was about Samsung and its relationship to artificial intelligence, the idea that the stock had hit a 3-year high with profit leaping 15-fold. Can you explain this, the context here, on where AI is making a difference in more traditional companies in tech?
Yeah, well, Samsung is super diversified. So that's a very unique one because, of course, they saw a pretty significant gully because of memory and the fall through of their semiconductor business. But, of course, they sell connected refrigerators. They're going to sell the next generation AI smartphones and PCs that we are hearing about. I look at things like financial services. I've said for a long time, everybody needs banking, but nobody wants to go to a bank. And we heard about mobility shifting this, but the ability for AI assistants to help us invest our money more intelligently, more wisely. Or, we talked a lot about frontline and hospitality. We have a Whataburger here in Austin where I live that's a complete digital kitchen, meaning nobody works in these places. So you've got robotics and you've got AI and you've got automations now that are bringing together an experience. Now, there's a whole nother conversation to be had about the impact on jobs and how we are going to continue to keep people employed if all these things are automated. But as a bit more of a techno optimist, I do believe that what we're not seeing yet is as AI proliferates, the new sectors and jobs that get created in these companies. So everybody right now is looking for where are we going to be able to extract value through growth. But I do think, and having conversations with lots of the CEOs that you have on these shows, there is a bit of a prune to grow strategy. People are finding efficiencies first. They're cutting costs. They're driving EPS growth to the companies, but they're going to eventually need to accelerate productivity.
To your point here, even if you believe in the productivity situation in the longer term, if you were having AI make the most of its progress on things that are not so obvious, like NVIDIA, on places like a Whataburger, and if people can't spend money on a Whataburger because they're not employed, what is the near-term pain?
So if you kind of look at how companies, make sure I understand the question right there, but if you kind of look at, where can people invest, what I keep looking back at is we have to flow through first, second, and third network effects. So the first network effect is going to be all the companies that provide hardware that include the NVIDIA in it. And then the next is going to be the companies that build softwares and platforms that can take advantage of that technology. And then the third effect is basically the industry. So it's going to be companies that, like Starbucks, for a long time has been using recommendation engines and filter systems. This is AI, by the way. This has been going on for a long time that can add value back to a customer experience. We got used to it with Netflix. We got used to it with Amazon. But companies in every industry, whether that's going to be, prescription drugs and figuring out how to connect there, or like I said, where we eat or where we take a vacation.
Dan, we have to leave it there. That is, of course, Dan Newman that we've been speaking to of the Futurum Group. And coming up next, we're going to have a larger conversation about politics. Of course, we are looking heavily not just at elections around the world, but of course the U.S. election season ahead of a critical interview that President Biden is conducting that will be aired later today. Stick with us. This is Bloomberg.
money, culture. Haslinda Aman tells the story of Asia's rise through the people who are helping to shape it. This week, with the drive of winning over a new generation of fans and players, Live Golf CEO Greg Norman is shaking up the game.
The best players in the world, on the best golf courses in the world, in the best cities in the world. It's very easy to get that multiplying factor to move out.
Latitude, encore presentation this weekend, only on Bloomberg. The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Turning now to U.S. politics, because President Biden is facing mounting calls to end his re-election bid in light of his poor debate performance last week. The president campaigning in Wisconsin today and Pennsylvania over the weekend, two crucial swing states. And of course, to put it all into perspective, here is Joe Matthew, host of Bloomberg Balance of Power. We're very lucky to have you, Joe, because there is those two critical campaigning states that he'll be in, but also the interview that he is doing with George Stephanopoulos that will be highly watched as well. How do you think about all of these events over the weekend?
Yeah, and that interview, Shonali, it's great to have you on today as well, is going to be something that takes place in Wisconsin. So he'll be rallying before a big crowd with the panels up. He'll have the teleprompters. As we keep hearing, we need more than that, and that's the point behind this interview here. There are still questions about how long he's going to talk to George Stephanopoulos, exactly what the staging is going to be. Do they do the walk and talk? There are questions about this as we speak, and they're keeping that pretty close to the vest to start off what's going to be a week-long set of activities here, not just the two states you mentioned, but we've got a NATO summit coming up next week here in Washington, D.C., and that'll be concluded by a big solo news conference that in itself will be a huge test, if not the biggest one, over the course of this week. We did see Joe Biden on the 4th of July. He's on Air Force One on his way to Wisconsin right now, and he had a couple of moments where he stopped himself. He kind of stumbled a few times. He referred to Donald Trump as a colleague at one point and cut himself off at one point when he went to criticize Donald Trump. Here's a taste of Joe Biden at the White House on the 4th.
I was in that World War I cemetery in France, and the one that one of our colleagues, the former president, didn't want to go and be up there. I probably shouldn't even say it anyway.
So he got a laugh there, but it wasn't exactly an overwhelming performance on the 4th of July. The question is, which Joe Biden's going to show up at the interview? Which Joe Biden's going to show up at the rally? And we're going to find out together tonight.
I have to say it's really hard to watch. And I also wake up with the context that we have had, of course, electoral change just occurred in the country from whence I come. And Keir Starmer, a statistic of his is he's 61 years old. That is the oldest first-time Prime Minister the UK's ever had at 61. And I immediately just, that sort of statistic amazed me at a time where we're thinking so much of age here in the United States. Ultimately, how do you think
Trump
this
is only 3 years younger?
I know. How does this unfold from your perspective? How do you think, is there any way, even if this performance is fantastic tonight, is it enough to overcome the cynicism that has come from both sides?
I don't think so, and I don't think even the Biden campaign thinks that, even in their most hopeful moment. This is going to need to be a recurring appointment for Joe Biden, and he's going to need to clear the bar each time. How many more interviews will be set up? how many more sort of outside of the box events they can think of will be set up? Do we need to see him after 8 o'clock at night? There's a lot of talk about what he told governors in a meeting this week, that he needs more sleep. How does that go if you're the commander-in-chief, the leader of the free world? And I will tell you that I've been talking with Democratic sources here in town, some of them Democratic lawmakers. We got a third one to call for Joe Biden to step down in Seth Moulton, the Democrat from Massachusetts. I was speaking earlier off the record with a Democratic lawmaker, a Biden ally, who says that number is going to go up on Monday. When lawmakers return to town next week, you're going to see that letter, I would suspect. It's just a question of how many Democrats sign it, stating their intentions here. They've all been talking over the holiday. They've been on the phone, they've been on Zoom, they've been hearing from constituents, and this is all anyone is talking about. So when Joe Biden sits down with world leaders next week, even his own Democratic allies on Capitol Hill may be calling for him to call it a day.
Joe Matthew of Bloomberg Balance of Power, thank you so much for joining us. Of course, a very busy weekend for Joe Biden and a critical one at that in the U.S. election season, Caroline.
And Shonali, I mean, we have to keep bringing it back to what does it mean for assets? We've seen the bond market prior to the jobs data really move not only on services data, but also what would a Trump leadership mean? Will we see more fiscal spending? Will we see higher tariffs coming on Chinese goods? Will we see more inflation pressure? Therefore, do we see the 10-year sell-off? What's interesting, though, is in the crypto world, one that you know far more intimately than me, we've seen a lot of play of politics around Trump being seen as very pro-crypto. If we get a different person running against him, what does that mean for ultimately the Bitcoin price and regulatory aspects?
And not to mention, there has been a stunning amount of money from the crypto community going into the elections, as well as a ton of people who say they're coming out as single-issue voters. Now, do they actually do that in droves, Caroline?
With Bitcoin on the downside, and that is largely seemingly a supply side issue on the day, we can dwell on all of this with Mike Belshie, CEO of BitGo, joining us to discuss the future of crypto, of ETFs, of regulation. But let's just look at the price point on the day, Mike. And look, we've almost become unused to its volatility of late with just 2 percentage point moves. It then moves 5%. We're all like, oh my goodness. But it does seem that it's been on a downward trajectory. It's hit through some key technical daily moving average levels. And it seems as though Mt. Gox in Germany selling off some of its, confiscated crypto seems to be the issue here.
Well, that seems to be the rumor. By the way, thanks for having me on the show. Whether the Mt. Gox coins have actually hit the market, I think the answer is likely no. And then what percentage of them will sell? Who knows? Some of it will go into liquidity, of course. But this is pretty normal for Bitcoin. Those that have been in the space, and BitGo's been here for over 10 years now. These cycles come and go, and we see 20% drops from time to time. But in general, the climate for Bitcoin and the thesis for what it's about has never been stronger, which is why you see so many calling for pretty amazing positive upside over the next year or so. And of course, you just talked about the politics of it all. In the U.S., we have a massive debt. We have a massive deficit. We are about to figure out who's the next leader of who will spend the next $10 trillion. But there's really not much debate that they're going to continue to spend $10 trillion. So Bitcoin will be a fixed supply and will be a hedge against the dollar. That will remain true in spite of the short-term changes.
Okay, I'm interested in ultimately how much the crypto narrative is still about central bank policy, is still about inflationary pressures, or, ultimately the people who are currently holding crypto, are they thinking that actually it's more of a longer-term paradigm shift of a technical way of more efficiently running money?
Look, they all matter. Bitcoin itself, of course, is the value store, which is where you hear that narrative about having a fixed supply currency that's just a safer, sounder money. We know that the governments are going to continue to deflate. Politicians around the world will compete for who becomes the reserve currency of the world. I think the U.S. is still in the dominant position there. But then on top of it, we have applications that are built. So we're talking about the Ethereum ETFs. Ethereum, of course, is a platform for running smart contracts. This is where you can start to take large swaths of the financial system as we know it today and put it onto transparent ledgers where the activities of broker-dealers, of derivatives platforms, of your investment funds, et cetera, can all be put on chain in a way that everyone can see it.
Mike, it's kind of a difficult moment here because you have Bitcoin that was flirting with 70,000 into that Bitcoin, not Ethereum, Bitcoin spot ETF approval. You're on the verge of a potential approval for a spot Ethereum ETF, yet you've seen Bitcoin prices decline fairly dramatically in that time. And while I understand Bitcoin's a volatile asset, it is now drawing new retail investors into it. And so with that excitement really waning to this degree, with the price movement to the downside this drastic, how does that, frankly, spell a little bit of a warning sign for what that means for the debut for Ethereum? Does it draw one?
Look, I don't think so at all. These are long-term plays. We're in the early innings of these markets, and they are so small compared to other markets that we are used to, which is part of why they're so highly volatile. Whether the ETF for Ethereum comes alive this summer, I think in general, people agree the chances look pretty solid that it will come in the not too distant future. And as it does, that will allow institutional investors to determine whether or not they want to participate. Note also, however, that the regulators have not approved staking for those Ethereum ETFs, which is becoming an increasingly important part of the yield that comes with Ethereum and why people would want to hold it. So there's more work to be done. In the short term, you're going to continue to see bumps, but this is not long-term challenges at all.
Mike, we thank you so much for your time today. Of course, have a great weekend. That is BitGo's CEO, Mike Balshi. And we have so much coming up for you in the next hour. Vonnie Quinn is going to join me here on Bloomberg Television and Radio. We're looking at a market here with a heavy bid in the bond market after the jobs report and still green on the screen when it comes to the S&P 500. Don't call it out for a long weekend. Stick with us. This is Bloomberg.
This is Bloomberg.
Liquidity is the lifeblood of an airline. We make very conservative decision-making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New episode Wednesday on Bloomberg Television.
People People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
Power, money, culture. As Linda Amon tells the story of Asia's rise through the people who are helping to shape it. This week, with the drive of winning over a new generation of fans and players, Live Golf CEO Greg Norman is shaking up the game.
The best players in the world, on the best golf courses in the world, in the best cities in the world, it's very easy to get that multiplying factor to move out.
Latitude, encore presentation this weekend, only on Bloomberg.
Welcome to our Bloomberg television and radio audiences worldwide. This is Bloomberg Markets, and I'm Shonali Bassick.
And I'm Molly Quinn, and it is the first trading day that markets have to respond to this jobs report, Shonali. But of course, there have been 3 days of jobs data. There was services data. There was so much going on this week, Fed minutes. So there was a lot to react to today, not just this morning's data.
It was, and I've been saying to everybody, don't take an early weekend. There is still a lot of trading going on, and of course, a lot of questions to be asked, given that there are a ton of questions around politics worldwide, the UK, France, the United States. We'll talk about it all through this hour.
And we are getting plenty of market movement, obviously post-NFP, but of course, as you mentioned, post the election as well. It seems like there's an election every 2 days at the moment this year. But let's bring in Michael McKee to talk about the wage and jobs data, because of course, pivotal to the Fed. We'll get more Fed speak next week from Fed Chair Jerome Powell. What will he pull out of the NFP that might make a difference to the markets, Michael?
The fact that the job creation is slowing is probably the key factor here, and that it slowed across the board, but we didn't see anybody with one exception falling off a cliff, and that exception is temporary help. Now, in the past, that's been seen as something of a canary in a coal mine, so we'll have to keep an eye on that, but they'll need more than 1 month's data for that. We did see another slight slowdown in wages, but wages are still running ahead of inflation, so workers are doing okay, and as long as next week we see the CPI come down, Fed will be relatively happy with this. It's slowing, and that's what they wanted and expected.
You know, I feel like I'm asking you this question, and you might respond like Fed Chair Powell would. We're the central bank, we're not political. But at the same time, as if you look at these jobs numbers today, how does this play into the election cycle as well?
Well, that's an interesting question, because ordinarily you'd say the jobs numbers are relatively good, the economy is relatively good, wages are outpacing inflation, and that should be good for the incumbent party, and it's not. There are a whole lot of things that are going on outside of the economy. Now, maybe by November, we will get back to the old saying about it's the economy stupid, but right now, the economy is sort of sidetracked while the freight train of the two candidates goes by.
Michael, we didn't have the SAM rule triggered, and let me put in a little bit of a plug here because Claudia Sam is coming on later on and she has a lot to say about this. But is it increasingly a sign that we are perhaps slowing more than markets are anticipating, that the rule nearly got triggered this time around?
Well, it wasn't that close, but it is still closer than it has been. The issue for markets is that they have, as somebody put it, an overreaction function, and they're going to take anything that happens on a day-to-day basis and run with it, basically because that's their job, is to trade, whereas the Fed only has to make a decision once every 6 weeks, so they will look through a lot of this data until they get to the day when they have to make decisions, and we'll have 2 more inflation reports, the CPI and the PCE, coming up before the Fed makes its next decision. We'll get retail sales and spending numbers. So there'll be a lot for the Fed to consider that's not in this report. It makes it a little easier to see the path to September, but it doesn't guarantee it.
Certainly nothing too alarming for the Federal Reserve at the very least anyway. Michael McKee, thank you so much. We will be speaking with Michael again a little bit later on, but let's get to the markets now and the reaction. Jess Menton is with us. us in studio. Jess, we've seen a bit of a round trip today, and there was a lot to trade on today. Where are we at the moment?
There is, even despite coming off of a holiday yesterday. So if you're looking at the S&P 500, it's actually on pace to close at its 34th record today, if it can hang on to these gains. So it's being driven by the communication services sector. So probably not surprisingly, you have companies like Meta that are housed in there, as well as Alphabet that are driving those gains. But on the flip side of that, you do have energy stocks lower, down about 1.6% in the S&P 500. When it comes to individual movers, though, I have to point out what's happening with Tesla, because the first half of the year, it was actually down 20% through the end of June. But if you look at the winning streak that it's been on, TSLA is the ticker symbol on that. It's trading roughly flat now, but it actually had briefly erased its year-to-date losses earlier because of how much it's gained so far this week. It's actually up about 24% this week alone. So it's been a big run here. Obviously, we had the data earlier this week on when it came to its second quarter delivery numbers that definitely beat those expectations. You also had Dan Ives. We know he's a very perma bull when it comes to technology and growth stocks like this, but he also raised his outlook for that company because they did drop it from their best ideas list earlier this year. He had a target around 275 earlier this year. Now it's around 300, so it would imply about a 20% rise from Wednesday's close, since obviously Thursday the U.S. markets were closed there. But then, of course, another one I'm keeping a close eye on is Macy's. If you look at department store companies that are really driving things today, that stock's up close to almost 10%, so it's almost its best day since March 4th, and that really comes on the back of the Wall Street Journal did have that report, Shonali.
You know, I'm also interested in another stock down on the day, and it's rarely down on the day when other things are up on the day, and it's NVIDIA.
Yeah, of course.
Getting a rare downgrade from New Street Research. It's a rare downgrade, as
it is
written. What do you think of this?
So, especially because you can use the A&R function to see what it looks like when it comes to the upgrades and downgrades for a stock like that. But that is something that's rare, and especially because it just came off of its stock split. It actually went into effect before the start of trading on June 10th. So usually what happens, you see a big run up like that before that happens, and then it begins to fade. So we saw that stock technically enter a correction briefly at the end of last month. But now if you look at this week, it's up more than 3% alone, and it's up actually roughly 35% since it had its earnings report on May 22nd and did announce that first stock split.
Jess, thank you so much. Jess Menton there with all of the market moves. And of course, we'll be keeping our eyes throughout the market trading day on those moves. We do still have a couple of hours to go. And if anyone's gone home, I don't know why, because there is a lot going on in this market. Let's get more now on this market with Ross Mayfield, Baird Investment Strategy Analyst. Ross, thank you so much for joining. You know, it's been a busy week for markets, as much as you may not think that looking at the figures. And Bespoke Investment Group pointed out that, you know, typically when July 4th falls on a Thursday, the best days are Wednesday and Friday, and that might actually happen again this year. How much is the market reacting to today's jobs report, and how much is it just trying to feel its way into next week?
I think it is a little bit. You can see Treasury yields down a bit. I think the bigger question is whether the initial reaction is the right one, whether, you know, the bad news is good news because it means lower rates and higher potential for a Fed cut, or whether this actually is something a bit more ominous, you know, paired with some of the economic data we had. On the earlier side of the holiday, ISM services, PMI in particular, was concerning because that services economy has really driven a lot of the growth over the last couple of years, and it came in significantly below estimates. So I think there's a little bit of bad news is good news right now, but I'm not sure that that's actually the right reaction over a longer term period. So good for the week, but definitely some things to be a little bit more concerned about heading into next week with that CPI print late in the week.
Ross, there's a lot to look at between now and the end of the year. Of course, we are just starting the second half of the year, and of course, the second half brings an election season. It brings a lot of uncertainty on whether the Federal Reserve will accomplish that first rate cut or not. How choppy do things get from here?
You know, we haven't seen much volatility at all. It has been a very calm market despite all of the kind of macro concerns, geopolitics, domestic politics, inflation, interest rates, all of the things that we talk about every day. There's been a lot of noise, and yet the market has remained very, very calm. The VIX has kind of stayed near historic lows for most of the year. I think that you can probably expect some chop. It's, you know, it's not the most groundbreaking call to say that volatility will pick up here from historic lows, but I think, as you mentioned, you've got the election will be ramping up. There's a lot of uncertainty around that. The questions about whether the Fed is going to be able to cut rates. You've got earnings, which really need to come through big to kind of justify valuations here. So I think you'll see some more volatility. Q3 is typically a weaker quarter anyway. So particularly in August and September, you see some weakness. I think there will be a lot of volatility. And then in election years, you do historically get big rallies into year end. So we'll watch for that as well.
Are you repositioning now by any means? What do you buy and what do you sell?
I don't think you need to reposition much here. The themes that have been the themes for the last 18 months or so kind of remain that, right? So you can quibble about valuation in tech stocks, but you want to be exposed to secular growth themes, especially if we're returning to a domestic economy that's growing at kind of a below trend pace, right? That was the big story for most of the 2010s, was you want to go to the stocks that are bringing growth to the table because the economy is kind of meandering along. I think quality is a big theme here. It's going to lag at points, but in a higher interest rate environment with more inflation, uncertainty, you want to be exposed to quality names that can fund their own growth, that aren't exposed to capital markets as much. So higher for longer, I think you want quality. I think you want to be exposed to secular growth themes, AI and big tech being one of those.
Ross, how much does it matter to these markets, to your clients, who the Democratic nominee will be?
I don't think it matters all that much to markets. The betting odds are about the same if you look at the polling for various potential replacements or for Biden himself. I don't think it changes much. I don't think that the big story of the policies that matter coming out of the election are going to change all that much. So again, it's one of those things that it's going to be noisy. It's going to be one of those things that clients hear a lot about and might get concerned about in the end. But as for the story that matters, 2025 and beyond, the big policy themes are probably not going to change all that much, regardless of who's on the ticket in early November.
So we know there are going to be things like tariffs, immigration, and so forth, and those very much do affect the markets. Are you positioning for some kind of volatility around the election? How do you do that?
Well, I think you hit on one, and again, a kind of a secular theme that we've been paying attention to is this idea of deglobalization. Now, that's not one that's contingent on either candidate or some combination of Congress and the White House, but something that really has taken hold over the last 5 to 6 years and probably will continue regardless of who wins in November. The speed and the tools will be different. And so paying attention to those tariffs, paying attention to the kind of tech Cold War that we're in with China right now, I think will be especially important. Those are areas to watch very, very closely. I think, the big individual tax cuts and tariffs are probably the two main policy themes that we're watching most closely coming out of this election. Now, both candidates will have ideas on how to handle both of those. I think some of the tax cuts will be extended regardless of who wins. I think we will remain in kind of this tech Cold War with China regardless of who wins. But again, the speed of that process and the tools used will matter to investors on January 1st, 2025.
Hey, Ross, if you think about the market itself and what has risen in this market, you have not really seen a whole lot of breadth outside of the large cap tech names and some others, frankly. But let's talk about when you maybe start to see some of that breadth. Do you have confidence to go into mid-cap, even small-cap names on the precipice of a potential rate cut? Or is there still too much uncertainty there?
I'm not chasing small and mid here. I know there's a huge valuation discount, but even if the Fed starts to cut rates and, the market is pricing 1 or 2 cuts this year, you're still in a pretty restrictive zone. You still have a lot of headwinds for small caps. The domestic economy is slowing. If the Fed is cutting interest rates, it's probably because the job market is starting to crack and they get uncomfortable with the labor side of the picture. So it's not necessarily a reaccelerating domestic economy here, even if the Fed cuts rates on the margins. And that's the kind of environment I think you need for small caps to thrive, is really that risk on, strong domestic economy, cyclical stocks outperforming up and down the cap scale. We don't see it here. I think in a higher rate environment, even if the Fed cuts, it'll be higher for longer. Large caps just have such an advantage in that environment for funding growth, for cash flow purposes. And so I wouldn't be chasing small caps here, to be honest with you.
Ross Mayfield, Baird investment strategy analyst. We thank you so much for your time. And I keep on saying this to everybody, happy 5th as well. Keep those holiday vibes going, but stay tuned to the market because, of course, there is a lot going on. And up next, we're going to turn from the markets directly to the elections going on in the United States and Europe and how the markets are reacting, because we have seen interesting trades going on in global markets and, of course, big moments for the U.S. election in the next couple of days. We will talk all about it next. Stick with us. This is Bloomberg.
The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From breakfast cereals to pet foods, General Mills has an iconic array of brands. But future success depends on efficiency, innovation, and insight. CFO Kofi Bruce does much more than crunch numbers.
Our first job is to intimately understand and anticipate the consumer's needs.
Watch Chief Future Officer. New episode Wednesday on Bloomberg Television.
All right, President Biden in Wisconsin today, one of the crucial swing states, of course, so vital to the candidates as they vie for the presidential contest. Biden facing a storm of criticism, obviously, for his poor performance in last week's debate, and that continues. And we're waiting, of course, for tonight's interview with George Stephanopoulos. Let's bring in Bloomberg Wall Street Week anchor David Weston. David, what's the message that Biden will want to get out tonight as George Stephanopoulos asks him the hard questions?
Well, I've thought about that, Vonnie, and if I were George, the main question I would want him to answer is, how do we make sure that doesn't happen again, what we saw on that debate stage? I mean, I think any of us who saw that were concerned about his ability to function as the President of the United States. And you can say it was a bad night, you can say it was a cold, you can say it was jet lag, but how do we make sure that doesn't happen again at some critical moment when he's having to deal with a crisis? I think that, in a nutshell, for me at least, is the critical question the American people have on their mind.
Beyond that, too, one thing we've been asking a lot of our guests here is what's more important, David, at this point, the policies that he answers to or the performance itself?
Oh, the policies are irrelevant right now. At the moment. I mean, and that's one of the challenges I think George will have, because I think President Biden will keep talking about what he's done for the country and all the things he's accomplished. And one can agree that he's accomplished a lot, whether you think it's a good thing or a bad thing. He did a lot of stuff. But that's not, I don't think, what that debate performance raises a question. It was not what he's done in the past. The question is, what can he do now? And what can we do over the next 4 years? And do we have confidence in his ability to lead the country? So actually, I think, ironically here, I think the policies are almost irrelevant, except perhaps as a way of getting at the question of competence.
David, Stephanopoulos absolutely will want to know who the Biden campaign and the people around Biden might be thinking about if indeed Biden does step down. So he's going to try and get some kind of color from Biden on who he might be thinking about. Biden will probably try to sidestep that, but is that a question that we should be asking the president, the current president?
Well, I mean, certainly it's on all of our minds, and so we should ask the question. I agree with you. I don't know if it's a sidestep or not, but listen, I don't know, obviously, what the president will say, what George will ask. But if I were President Biden right now, and this is my experience from other crises, not as big as this, but other crises, when you're in a crisis, you don't decide anything until you have to decide something. And so, for example, whether I'm stepping down or not, I would put that off as long as I can because there's more data coming in, and I want to know more before I make a decision. And so I would duck the question. I'd say, look, I think Kamala Harris is a wonderful person. There are a lot of other wonderful people who could run this country at the appropriate time, but I'm the President of the United States. I intend to remain that until he changes his mind. Unless he's decided he wants to make an announcement tonight with George, which would be very surprising, I think he will probably say, they're really great people. They're all terrific people. There are a lot of people who could do the job, but I'm the one who's best.
The strangeness of this moment is that you have President Biden addressing the American people writ large, but also his supporters. Can you give some context here around how the Democratic Party really feels about this moment and the splitting here you're seeing between the people who have supported Biden and the people who may be breaking away at this moment?
Well, there's a lot of reporting about donors and donors pulling back, and it makes some sense if you're a big donor right now. If you get a call and say, please give us $1 million, you'd say, well, let me think about that for a bit before. But I don't think that's the most important point. I think what we saw actually this week was the Democratic members of the House of Representatives, because what really happened after that debate, I think, was serious talk, and you've seen this in the bond market. It was reflected in the bond market, a real possibility that you could have the Republicans take both houses of Congress in addition to the presidency and have a clean sweep, as it were. If you're a Democratic member of the House of Representatives, you're asking yourself some tough questions. Is having President Biden at the top of the ticket helping or hurting me in my hard-fought race? I think those are the most important supporters that he's got to really reach out to right now.
The ripple effects are absolutely incredible. David Wesson, thank you so very much, of course, of Wall Street Week. And we are also going to shift gears now and not just talk about the United States, but the UK. We're going to talk about the election's outcome with Bloomberg's Ewan Potts, who's been covering the election here, and talk about the history, the context here, what it took to get to the place where there has been a defeat here of Rishi Sunak, and you're seeing Keir Starmer really take the reins of the future of the UK at this point.
Snarly, yeah. What a defeat it was for the Conservatives. I just want to start off with a little bit of background as to how we appoint our prime ministers, because it happens a lot more quickly than in the US. At 10 p.m., the votes were finished. We finished voting yesterday, and by midday today, we had a new prime minister, and it involves kissing of the hands. So after the votes have been counted, the new prime minister, or the prime minister-to-be, visits the monarch, and the ceremony is called kissing of the hands. It's unclear. It's reported in different ways as to whether kissing actually takes place, but he asked the King's permission to form a new government, and the King says, do you have the votes in the House of Commons? And Keir Starmer clearly said yes today. Keir Starmer, the leader of the Labour Party, has won the UK election with a landslide, 170 majority. To put that in a bit of context, Tony Blair got 179 in his election landslide back in 1979. Keir Starmer winning a stunning victory for the Labour Party, and it is a crushing defeat for the party of Rishi Sunak and Boris Johnson and Brexit. The Conservatives crashing to their worst election results in history. That's a party which dates back to 1834. So a terrible result for the Conservatives, and we have a new Labour government in place for the next 5 years.
Ewan, what will be the first steps that Keir Starmer will want to take policy-wise in order to cement a Labour footing now in the country?
Well, Vonnie, Keir Starmer ran on a platform of change, as you might not be surprised to hear. It's been a very turbulent 14 years here in the UK. He talked about ending the chaos. It has been a chaotic period, certainly politically, in the UK. So that was his key message. But in terms of policy priorities, he says the number one priority of a Labour government will be getting economic growth restarted. He says that back in the Blair years, the last Labour government, economic growth was 2.5% of GDP on average per year. And he says that is a reasonable target. If you look at GDP growth in the last few years in the UK, it has not been anywhere near 2.5%. So Labour really keen to get that growth engine started again. Of course, it's going to be difficult. All governments want to grow the economy faster, but it says it's got concrete plans in place to do that. Labour would also like to spend more money on public services. They've been starved of cash in many cases over the last few years. But the trouble is the public finances are really, really tight in the UK, and there is not a lot of money to go around.
Ewan, thank you so much. That's Ewan Potts there for Bloomberg News in London. More elections, and while there might be some stability in the UK right now, there's potentially more turbulence in France, where we're seeing a second round of elections on Sunday. Let's bring in Bloomberg's Paris Bureau Chief Alan Katz for more. So, Alan, Marine Le Pen is adamant that it's not over, that she may still get a majority. What is it looking like for the French people now?
Well, it's looking a little bit confused. It's not at all clear that Marine Le Pen will get a majority. In fact, if you look at the polls that have come out yesterday and today, they indicate that the National Rally, while it would be the biggest single party in Parliament, will fall short of getting a majority. Now, that's important because the National Rally has said that it will not accept the prime ministership if they don't have an outright majority, which would allow them to pass whatever laws they want to pass. Whether that's what they actually do or not, it remains to be seen, but that's what they've said. And so they still are said to be the biggest party, but it does look like they will likely, if the polls are right, fall short of a majority.
You know, Alan, one thing I woke up this morning thinking out of the UK news and heading into this weekend in France as well, boy, is the world changing quickly. And one thing people don't think about a lot when you're in the heat of the election cycle and thinking about what this means for a country is what are the ripple effects for the elections in France? It's across Europe.
Well, they're pretty large because France has quite a core position within Europe. And obviously, it's one of the founding members of the European Union. It's the second biggest economy in Europe. But the other thing is that Emmanuel Macron has really taken up a big space within Europe, particularly since the retirement of Angela Merkel in Germany. Macron's become essentially the de facto leader of Europe. Of course, there's no single leader of Europe. There's the president of the Commission and things like that. But he's really the most influential single leader in Europe. Now, don't forget, his position is not at risk in this election. It's a parliamentary election. The president in France is elected for a fixed term. It's through 2027, so unless he resigns, he's staying there. But if he emerges from this really weakened, it really has a big effect on France's ability to influence the rest of Europe, on France's ability to affect the rest of the world. And as you say, it might also have a ripple effect on elections to come in other European countries. Just like elections in other European countries, I'm thinking of Italy or the Netherlands, might have had an effect on increasing the popularity, for example, of the National Rally in France. It's a far-right party, similar in many ways to, for example, the party that Giorgia Meloni leads in Italy.
Alan, we thank you so very much. That is Bloomberg, Alan Katz, of course, from France, ahead of a critical weekend in the country. And before we let you go, we're going to turn back to the U.S. markets. Of course, we're still looking at green on the screen here. It's like nothing ever happened over here, but of course, there's a lot happening under the surface. Bonnie, we're going to talk about U.S. presidential elections, yes, and next, and Joe Biden's big interview. Stick with us. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
The private markets in general have exploded at the expense of the public markets. Part of that's regulatory, part of that's just structural in the market. Private credit particularly exploded when the banks took a step back.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
Power, money, culture. Haslinda Aman tells the story of Asia's rise through the people who are helping to shape it. This week, with the drive of winning over a new generation of fans and players, Live Golf CEO Greg Norman is shaking up the game.
the best players in the world, on the best golf courses in the world, in the best cities in the world, it's very easy to get that multiplying factor to move out.
Latitude, encore presentation this weekend, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The top names in business are on Bloomberg.
What I can say is that we've been making significant investments across the franchise, across regulatory reporting, across data, and across resolution and recovery planning. These are areas we've been investing in because we know they're areas that, frankly, the industry likely needs to further enhance, and we certainly want to enhance them for ourselves.
Nobody covers business like Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
President Biden is set to speak in the next few minutes in Wisconsin, one of the crucial swing states. Let's bring in now Joe Matthew, host of Bloomberg's Balance of Power. That speech set for 2:15 Eastern. Joe, what will President Biden want to get across beyond the obvious? He's probably going to tout this morning's jobs report, for example.
Well, that's true, he will, and we did get a statement from the White House on that, but it's going to be a lot less about what he says today and how he says it. I don't know if he's going to be yelling on the top of his lungs or whatever the plan here is, but he has to express vitality. Everyone's asking what kind of Joe Biden is going to show up for the rally today, which will be scripted. He'll be on a teleprompter, but also for the interview that he's doing with George Stephanopoulos, also in Wisconsin, this important swing state that he's chosen against the backdrop of some very difficult polls here. Since last Thursday, we told you a couple of days ago, Joe Biden raised a lot of money after that debate, but the public polling is not improving. It's getting worse. If you look no further than the Siena College New York Times poll, Donald Trump is beating Joe Biden by 6 points now. That was a 3-point spread before the debate, and we saw confirming numbers, the same 6-point spread in the Wall Street Journal poll that came out after the debate here. So there are questions about whether Joe Biden is capable of turning this around. Is the damage done? And he's going to have a lot of opportunities over the next week. It's today with the rally and the interview. It's also going to be a visit to Philadelphia on Sunday. Of course, another very important swing state that he frankly needs to win to keep his job. And the NATO summit will follow next week. That's going to be a series of important meetings with world leaders that'll conclude with a solo news conference. So we'll be sitting here next Thursday talking about how he's going to perform in that environment, much like we are right now with this rally.
Joe, earlier we were talking to David Weston, and a good point he made that I'd love your view on here is the ripple effects. When the feelings change around Joe Biden, particularly from within the Democratic Party and his own donors, what is the ripple effect that it has in the House and Senate? What does it mean for Democratic
down ballot
lawmakers?
is a huge question. You're asking the right questions here, and David is usually speaking to the right angles. This is a question about money, of course, and coattails. And if we do start seeing donors now, and we are starting to see these initial moves of donating down ballot to Congress, Senate, gubernatorial races as well, less to Joe Biden. But I have to point you back to the fundraising we saw, which was frankly very impressive following the debate. Joe Biden and his related committees pulled in $127 million for the month. 38 of that was coming after the debate, Thursday, Friday, Saturday, Sunday, when that's all anybody was talking about here. So I think we're going to need a little more time to answer the money question. We have to remember there is a convention that is set for Chicago in August, and nothing has changed yet. And if Joe Biden does, in fact, step out of the way, it's going to be Kamala Harris we're talking about here. So same delegates, same potential donors, and same ideas on the issues. This could take a couple of different paths before we know.
Yeah, Joe, it does seem like her name comes up constantly. Are all other contenders out of the race now if Biden does step out?
Well, no, look, she's the vice president, so her name should be considered the first here. And it's interesting that over the past couple of days, that's been a bit more of a concerted conversation. CNN had a poll out, found her in a tie, in fact, leading by a couple of percentage points, but within the margin, Donald Trump, and performing better than Joe Biden with important groups, women, 50% of female voters backing Harris over Trump versus 44 for Biden. Similar lead when it comes to independent voters. So she's got a pretty good story to tell here, and that would be the next thing, of course, after Joe Biden. She's on the ticket. If we start looking elsewhere, governors like Gavin Newsom or Gretchen Whitmer, I don't think any of them, as they look at 2028, want to stand in front of Kamala Harris and somehow block the first woman of color from potentially being the next president of the United States.
John Matthew of Bloomberg Balance of Power. Of course, we're looking forward to all of your coverage of a very, very busy weekend for President Joe Biden in this re-election bid. Now we're going to switch gears. We're going to also talk still about the U.S. election, but we're going to now talk about it with Henrietta Treyz, Director of Economic Policy Research at Veda Partners. And Henrietta, I feel like I need to just cut to the chase here, because in your most recent note on July 3rd, you had written that you believe that Biden is going to drop out. How did you get to these odds, and what drives that analysis?
Thank you for having me. You know, the odds have been increasing ever since Thursday night's debate. And obviously, my clients are investors. They love to hear hard numbers. That's sort of how their minds operate. So I put odds on a lot of things. And in this case, I think the inevitable outcome here is that Joe Biden gets off the trail. I do agree with everything that's been said thus far. I expect that Kamala Harris is definitely in the lead to replace him, and I think has the machinery behind her to make that a relatively painless transition. What really has driven this is that the foundation behind Biden staying in the race is this idea that he alone can fix it. And when Lloyd Doggett, the representative from Texas, came out earlier this week and basically said, you know what, I disagree with that premise, it unleashed a dam of opposition to Biden being able to say, I alone can fix it the way that he did in 2020. So now, as long as that narrative is gone, as long as that foundational pillar of why it needs to be Biden is out of the way, then the real question becomes, how do we replace Joe Biden? What comes next? Is it Kamala Harris? Who does best in Pennsylvania? Does it need to be a wide open convention with maybe some ad hoc debates between Gretchen Whitmer or Gavin Newsom or Kamala Harris? Or really, do we just sort of pass the torch? Biden sort of anoints her, passes along his delegates, and says, hey, you know, you're not necessarily bound to be with me, but I would like it if you would now migrate to Kamala Harris. I think the party would take that up really rapidly. So my odds are 70% that Biden drops out of the race. But I do think that David made an excellent point, which is that you don't necessarily need to make bad decisions quickly. I don't see any reason functionally why Democrats should hand the RNC the gift of announcing their replacement before the RNC actually takes place. So I think it could be a couple more weeks, and we'll get the announcement after the RNC. I think that makes perfect sense given the circumstances.
Yeah, I mean, that's true strategy-wise, I suppose, Henrietta, but optics-wise, it doesn't look great if the president is holding on and momentum is building for him to leave. How vital will he need to sound in order to get any kind of pushback on this current drumbeat to Biden leaving?
There's a couple things at play here. First of all, it's the middle of July. Travel numbers are through the roof. TSA pre-check numbers, thanks to Torsten Slok at Apollo, he publishes that, and it's phenomenally helpful. Everybody's out of the country, basically. Americans are off. It's not that we can't see replays of, you know, a viral moment at the debate on our phones, but people are not heavily engaged. And what's more, what the polling has shown us is that voters are very quick to transition away to a new candidate. Indeed, they've been primed for that all year. I have been calling this the invisible primary, where candidate voters don't think that Biden is going to be on the ticket in November, and 40% of people don't know if Trump is going to be in jail or not. So there's been this group of humans out in the voting public just really unsure about what's going to happen next. The latest Reuters Ipsos poll showed 20% of Americans are undecided about how they're going to vote. Those are crazy numbers. 23% of Americans in the CNN poll are saying they might change their mind. So I do think Biden and the Democratic Party as a whole, especially given the fact that it's July and the 4th of July right now, they have some time to sort of breathe and go into this with maybe a plan. And I think that the tension is just building, and people are going to be very excited to watch what happens next, because it is the national story right now, dominating all headlines, as is appropriate, and probably will for the remainder of the cycle, given this sheer scale of what's occurring.
Henrietta, a lot of uncertainty and certainly a lot of tension, and perhaps for the Democrats, this one sentence in your note as well creates a lot more tension. It's this sentence you write, right now, no Democratic candidate can beat Trump. Explain that thinking.
That thinking goes straight through the Rust Belt. You're looking at Wisconsin, Michigan, even Minnesota in some state, and some polling is up at play. Pennsylvania in particular. Kamala Harris does not do as well in those states as Joe Biden does. I mean, Scranton Joe wins Pennsylvania because he's from there. So I think the next game that a lot of D.C. has already moved on to is who would be the running mate if it is Kamala Harris. Would you try to pick somebody from Pennsylvania, from one of the Midwest states? Could it be Gretchen Whitmer in Michigan, who incidentally polls better than both Biden and Trump in that state and has approval ratings in that state that are not underwater, unlike both Trump and Biden? So I think that's really the biggest concern right now is name recognition. All of the candidates not named Kamala Harris have very low name recognition. But as I mentioned before, the American public is primed to get up to speed on somebody really quickly. I think it's fascinating to see how quickly France and the